Okay, so it's 11:02 and let's call this meeting to order. The first thing we want to do is take a look at the agenda and find out if there's any additions or rearrangements that someone might wish to make. Otherwise, I'd entertain a motion to accept the agenda as written.
So moved. Second.
Okay, all those in favor just signify by saying aye.
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 Aye. Okay. So we're on to the next issue, which is public comment, and I don't think we have anyone here from the public. Is that correct? All right, well, then we could move on to the February 12th board minutes. Do we have a motion to accept the board minutes?
I do.
And a second?
Second.
Okay, any discussion? Is there any additions or deletions to the minutes? Okay, hearing none, all those in favor, please signify by saying aye.
Aye.
Aye. Opposed? Okay. So, introduction of a new board member. Andrew, welcome to this august body. We have, none of us have been on the board, at least from the board member side. Management team has been here much longer than us. And I think maybe Lisa, you are the most senior member of the board now, I think.
Ironic.
Yeah, and maybe Mike is a close second. So, Andrew, what we'd like to do is just, if you would just tell us a little bit about yourself, and we'll give you a very short intro as to who we are.
Yeah, thank you. I got worried when I saw 10 minutes and I had to talk about myself for 10 minutes. So I'm Andy Haas. I'm the superintendent for Windham Northeast Supervisory Union, which is our main area is Rockingham, Bellows Falls, Westminster, but we also cover the towns of Athens and Grafton. I'm in my third year as superintendent and was the director of student services prior to that. I've worked in as a school administrator in schools K through 12. I started my career in education 30 years ago in Los Angeles, California, and then moved out to the East Coast. My wife's from Connecticut and wanted to get out here, so that's kind of what brought us out here. But I'm just looking forward to learning more. And one of the things I've learned from watching my board members, I have 5 boards, is really when they come on, it's the thing I talk to them about is just listen and chime in when you need to, but it's really important to kind of listen and learn how the board operates. And so looking forward to that. So.
Well, great. Well, welcome, Andrew. So why don't we start with Lisa, and then we'll move to Mike to be the most senior in the next.
Hi, I'm Lisa Grout. I taught for some 30 years. I'm retired. I've been on the board, I think, for about 4 years. And I just think that healthcare is one of those pivotal issues that I'm really glad to do a little bit push forward.
Thanks. Mike?
Hi, Andy. Nice to talk to you again. Mike Fisher. I've been on the board for about 2 years, formerly on the Burlington School Board. And like Elizabeth, or Lisa, it's so impactful, as we all know. And so it's really important work that and Suzanne and I have committed to really trying to get the board moving in a direction where we can improve outcomes and reduce spend.
Great. How about Cheryl?
Good morning. I'm Cheryl Scarzello. I'm the Director of Finance for Slate Valley Unified Union School District. Just had their budget voted down for the 3rd time, headed into number 4. I've been a business manager for 15 years. I was a board member, a school board member before I was a school business manager. And yes, agree very much, especially in these really tight times, that the healthcare is a really important component for school districts, employees and employers.
Great. Thank you. So we'll do Lance and then we'll go to the management team.
Lance Mills, I live in Fairleigh, Vermont. I'm a retired construction technology and English teacher at Riverbend Career and Technical Center in Bradford. I was also on the board of directors for Vermont NEA for about a decade. And I currently am the executive director for Orange East Education Association, the local that I used to be a member of and I was president of for a number of years.
Great. Bobby Joe.
Hi, Andy. Bobby Jo Salz. We've talked about other things in the past. And so I've been with VSBIT and VEHI for about 6 years, and I was with Blue Cross of Vermont for about 20 years prior to that. So welcome to the board.
Mark.
Thank you, Suzanne. Andy, welcome. I'm Mark Hage. I'm the Director of Benefit Programs at Vermont NEA. I'm a former school teacher from way back in the day, and I've been a trust administrator at VEHI since about 2001. And by the way, Andy, I really appreciate your comments about listening, but also if we need to rewind the tape today on any particular issue to provide important context, please feel free to ask us to do that.
And Jonathan.
Andy, good to see you again. And we've talked before, so will you be at VSA this week?
Yes.
All right,
Yeah.
so we could catch up then and fill you in and happy to answer any questions.
Okay, great.
And lastly, I'm a 31-year well, I've been retired just for a couple of years, but I worked for Vermont NEA for 31 years as a UniServe director. And I was an elementary school teacher for 12 years before that. I find this interesting. And as Mike said, we're going to be talking as we move along about how we can make this a better board and a more engaged board. So I'm looking forward to people who, as all of you seem to be, are willing to tear into this. Thank you.
Suzanne, we forgot Chris Roberts, our finance person.
Oh, geez. Oh my God, Chris. Sorry.
No problem. Hi, I'm Chris Roberts. I'm the Director of Finance for VSBIT and therefore VEHI as well as your TPA. And I've been in my role since 2001.
Okay, now,
Awesome.
thank you. I just want to make a few opening remarks to the group. In terms of our meeting expectations and, some of our etiquette, as Mike said, we did meet, Mike is the vice chair, to discuss the board in general in ways that we could work together towards what I consider maybe 3 goals, if not more. And one being increased collaboration, a very clear direction for our board of directors, and a renewed adherence to what our mission is. So we're going to talk about these items later in the agenda or even at later dates. But since we have new members, I'd like to just basically review a few basics. First of all, Bobby Joe, besides being amazing, is tasked with taking notes of our meetings, and it's not always easy. We try to utilize Robert rules with some basic exceptions when we want to clarify motions. But we really need clear, excuse me? Oh, okay. We need clear motions on acceptance of reports and other action items. Usually I'll call for a motion, a second, there'll be discussion and voting. If anyone isn't clear to the intent of a motion and its ramifications, we should really amend the motion either through maybe it's a misnomer, but certainly a friendly amendment. And I'll echo what Mark said too, is we really need to be clear. And if something is said that someone doesn't understand or needs some backstory to, we should take the time to make sure that's being dealt with. And in terms of our Zoom etiquette, I think you've all been around for a long time, but I really want to clarify that we need clear facilitation. We shouldn't be trying to talk over each other. So in order to make that happen, I think we're going to have to raise our hands, and I'll try to keep track of a speaking order. However, when another person is running a specific agenda item, let's say Chris is giving her financial report, and she's taking questions, you please still raise your hand, but allow Chris to call upon you. Or whoever the person is that's sharing at that time. So in short, we hope that the meeting runs smoothly and the board experience becomes a valuable experience for you. Is there any questions or comments about that before we move on? Okay. So item number 6 is the annual work plan. And I don't know, Bobby Joe, did you want to share that? Because I didn't see it in our packet, right?
No, I think there's a link to it in the packet, or there was supposed to be. Maybe I didn't get it. Let me look. I will open it. I've also been working
Okay.
on it this week, so there's kind of 2 different versions going on right now. So let me open that. It lives in our Dropbox, which if folks haven't used the Dropbox in the past, I encourage you to try to get in there. So let me just open it up. Sorry, I thought I had it nearby.
It's okay. So this is one of the items that everybody should be made more aware of that Mike and I have talked about, is to say, okay, so what do we do in a year? And what are the things that come up at certain dates that we need to deal with? Some of them are a regulatory model, or it's because it's legislation. And certainly there's some things we'd like to just see happen because it's good practice.
So, oops. And I'm trying to get this to do like half a screen, but it's not really playing along. Okay, so on the right hand side is what
Well, I don't think we see anything.
no.
Ah,
Ta-da. All right, so
There you go.
all right. On the right-hand side was the board annual plan that's been living out there for many years. And I, in the past, mostly, sorry, Tracy and I have kind of reviewed this when we were creating the agenda, but it needed a refresh for sure. There's still some old names on it and topics. So I have put it in the past, I've put it in a spreadsheet, but now I've kind of taken it and gone a step further. How it was broken out before was there was different quarters. So basically in October through December, these were the kind of things that we talked about. A lot of them are repeated, things like reviewing and adopting the agenda, Mark's quarterly report, the quarterly financials. Those are all things that we would meet on no matter when we meet. We don't need to meet each quarter to do these things, but every time that we meet, we would review these things. So if you see on the left-hand side, I've tried to break them out a little differently. So every meeting we have tasks that we will always do. We have a few that are really date specific, things like the annual member meeting. We do that in late October, early November. The health rates, the dental rates, the renewal rates for the Visters, which is the VEHI retiree plan, and our contract renewal. Those are all a lot more date specific that we really need to kind of build around. And then we have the ones that we should be doing on an annual basis that are, some of them we need to, probably do them within a certain quarter, but others are kind of flexible depending on when we do meet. Those are the ones that have the things like the reviewing the different policies, we're doing the different, the mission, conflict of interest, things like that. So we thought last time we met, it would make sense to try and maybe break these out. So we're looking at each of them in a different quarter, instead of trying to lump all of them together in January, or the first time we meet after the annual meeting. So these are kind of all the things that we do throughout. And then once we identify them, we could, put them in order of what needs to be done when. But I leave that up to you. Cheryl?
Bobby Joe, I just want to make sure I know, Q1 calendar year or fiscal year, just so I know.
For this, I just did calendar year just for ease.
Okay.
And if people prefer it to be fiscal year, I can definitely change it. I just was trying to highlight it easily as a calendar year.
Maybe just a note somewhere that just reminds us that it's calendar year quarter. That would
Yep.
just help,
Okay.
because I'll forget.
No, that's fine. So it's up to you, Suzanne, how you want to work on this. If you want to actually go through and try and do this all together, or if you want to work on this, separately as a smaller group, yourself, Mike, and myself.
Well, I think that, obviously when I was preparing for this meeting and looking through all the materials, and I was thinking back to just like maybe a year ago when I was a new board member, and it is overwhelming almost, some of these things. So what I think I would like to do is go, get through the rest of the meeting. And unless, Mike, you have a different opinion, because one of the things that Mike and I have talked about is doing shared leadership. I'm the chair and he is the vice chair, but I really want to work with his strengths. So Mike, I think perhaps we could subcommittee some of this and see where we are at the end of the meeting as well.
Yeah, that sounds great. I think the goal of this is to get to a more predictable, regular cadence, right? So that the board knows what is the work that we need to do throughout the year, when are we going to do it, and that can help us spread the load out across the year, but also lead to some predictability in terms of scheduling, right? So we saw how difficult it is and how much effort it takes Bobby Joe to set up what this meeting today, right? And this time it was me who had a schedule change. So I think both the work and when we're going to do the meetings, I think is really important that we agree on as a board going forward. So back to your question, Suzanne, absolutely happy to work on this with you and Bobby Joe and the rest of the management team, and bring it back to the full board as a draft for agreement.
Great. I agree. And it's also, it was on the agenda today also just to, for awareness to begin with, so that particularly some of the people who are more recently on the board, even though we have such a document and there's a variety of items that we must do in a coming year. So, okay. Any other comments or questions about this? Okay, all right, then I think we could probably move on to the Visitors renewal, and I'm not sure who is in charge of that one.
Mark, do you want me to lead that?
Yeah, go ahead, please.
Okay. All right. So I'm not sure if everyone was able to access it, but I put a link in the actual, just grab it, sorry. Sometimes you just have too many screens open. So I gave you a link to the entire thing. Do you need the entire thing? Probably not.
Try to run through the numbers, Bobby Joe.
Yeah. Yeah, I just get back in there. Sorry about that. All right. Sorry about that. Takes a little bit to get it going. So Blue Cross gives us a number of different factors that they go through with us to kind of explain how the rates are calculated. Kind of the two important ones that we went through this year were there's the pre-Medicare retirees, and those are folks that are not eligible for Medicare yet, but are on our plan and have retired. So they're looking at a rate increase of 5.3%. And this is how they calculate that renewal. And they do go through it with us pretty extensively, but thankfully it's a fairly low increase this year, looking at a 5.3 comparatively to the actives, which was over 13 prior to adding the margin. The Visitors team, I think, was pleased with the outcome of the renewal at 5.3. We also have a small group of Visitors retirees that are over 65 and Medicare eligible who have their prescription drug program through an individual program. So they're not eligible to be on the VBA plan, which is where everyone else is. And so that group of individuals received a 6% increase. So we met with Visitors last week and they were happy with the renewal, had no questions. There are two outstanding issues that we normally have to, well, there's one that normally we have to go back to, and then there was a new one this year, and that is the changes with the legislature. There's a I think it's H 7.66 mark. Yeah, there's a piece of legislation that's still outstanding. As far as I know, it's still outstanding. Is that correct, Mark?
Correct.
Yeah, that has to do with prior approvals and prior authorizations and things like that that could impact the rates. So they put an assumption in there at this point of 1.9%. What they think the impact to the rates will be. But once that legislation either does or does not receive approval, or if there's any type of veto or any type of downstream impacts, they will look at that again. The other piece that is outstanding that we have to kind of muddle through each year is the hospital increases. So they budget for those, what they think they're going to be in this April-May time period. The hospitals will actually file those in the very beginning of June. And so we'll have a better idea at that point. So if, for example, they think the rates are going up 10%, but the rates actually only go up 5%, they can do some adjustments to the rates and amend the filing after that. So that is still outstanding. And we will go back to them in July when we know more about those two items, if there's any changes that need to be made. Mark, did you want to add something?
Yeah, just to clarify a little bit about H766. This is a bill that would significantly change how prior authorizations are done in the state. It did pass the House and the Senate, but there's some concern that the governor may veto it, which is why we think it's still an open question as to whether or not it's going to impact this renewal and also our future renewal for the active. And next, Andy, when Bobby Joe was talking about VBA, she was referring to Vermont Blue Advantage. This is the subsidiary of Blue Cross that offers Medicare Advantage plans to people 65 and older. And as Bobby Joe noted, Mr. 65 folks, because of their unique pharmacy benefit, do not qualify for those VBA plans. And that's why they are still, if you will, in our stable. Otherwise, they would be with VBA. Thanks.
Mike, go ahead.
See, Mike.
Thanks, Bobby Joe and Suzanne. Just stepping back for a moment, Bobby Joe, for the new members, what is the ask from the board before you dove into the numbers, but what's the action for the board that we're considering?
The action for the board is to approve and allow me to write a narrative and an approval for the rates to be approved, and also to file them on our behalf. So that's really the ask, is to approve the management team to move forward with the filing, and we will have to have Suzanne come back and sign the rate sheets as well.
Historically, has the board adjusted these numbers, or generally do we take what the management's recommendations?
So historically, there's a big story there, but it has come a long way since then. It used to be that there was a big adjustment that needed to be done, that there were the Visitors Board actually did some adjusting. Sorry, Mark, I'm like stumbling through this. I don't know. Can you help me out?
Yeah, sure. So back in the day, and as Bobby just said, there's a long story here, but back in the day, the rates that were set for visitors were identical to the rates that were applied to the active population. And then for reasons we don't have to go into today, but perhaps at some point might be of interest, especially to the new board members, visitors was separate in its rate setting. And our reserves or our net position was implicated in the rate setting for visitors. So we could get a rate setting from Blue Cross. Visitors would come back and say, okay, thank you very much, but we think that we'd like you to use some of your reserves to help bring some of this rate down. Then that would go back to the board for back and forth. We would eventually make a decision, go back to visitors. Visitors would go to its trustees. And this was all being done on a fiscal year basis. And then there was another transition, right, where visitors' rates were no longer set on a fiscal year basis. They were set on a calendar year basis. And visitors was no longer contributing to our reserves or our net position. And so there wasn't much more at that point for the board to actually decide. The rate is the rate. Our reserves are no longer implicated in this renewal. And we have a very productive working relationship with visitors. And the understanding, and everybody's on the same page with this, is that the number is what it is. If visitors has questions, they can take that up with Blue Cross. Our job is simply to approve what the actuaries have recommended, presuming we don't have any issues with the numbers. And in this iteration, we do not. And then visitors moves forward with the number. So this is a much simpler process than it used to be, as my long-winded explanation just probably suggested. So it's just a question of us saying thumbs up. And visitors, by the way, is pretty happy with, as Bobby Joe noted, with this number.
All right, so Bobby, Joe, do you have more to add?
Yeah, I was just going to put some maybe recommended language in there for a motion.
Oh,
in the chat.
perfect. That's good because that's part of our clarity.
My apologies for not having it ready ahead of time.
Oh, no. Does everybody see the chat? If you make sure you check your chat box, that's
Yep.
okay.
So I'll make a motion to allow the VEHI management team to file the rates as listed in the 2025 VEHI retiring firing actuarial memorandum document through the Blue Cross Blue Shield of Vermont, and to allow our chair to sign the rate sheets for filing.
Is there a second? Okay, good. Thank you, Lisa. So did you get all of that, Bobby Joe? Yeah. Thank you so much for that. Is there any discussion about this? Okay, hearing none, I'll.
Sorry, Suzanne.
We do. I'm sorry,
Cheryl.
Thank you.
Thanks. Just being new, I'm just curious. So the increase is notably lower than the active, or the increases. I think that I have that phrase right for the active. So I'm just curious why there is such a difference. Just trying to understand that. Is it just the group, the population that they're dealing with, or?
Yeah, so there's a couple of things, Cheryl, if you don't mind if I jump in, Suzanne, sorry.
No, please.
There's a couple of things. So they have the old style benefits. So that's one piece. They do have a completely separate utilization. So it's a different group, it's a different plan. The Vistor 65 is post Medicare, so that would be a even less exposure on our end. And they did, it was notably, the actuary did say that they did have a notably lower trend than we did, our utilization. So Visters did raise the question to say, do we have to worry that we're facing, you know, a 13 or a 16 next year? And ours was filed way back in October, and theirs is being filed now. So this is 6 months further in the future. If anything, I hope it's a sign that ours is going to look better, but I don't know if that's the case or not. We'll know more in at the end of the summer. But it is a different group. It is also they have, these are high rates, so it may only be a 5% rate, but these, you know, these plans are on the rich side, and they are offered to folks that are typically in the 55 to 64 range. So they do have a higher rate, but they are receiving a lower increase. Mark, does that sound right?
Yeah, no, I think you covered most of the ground. I would just add that they're also anticipating that hospital budgets are going to be lower next year than they were last year, which is a very significant impact on any rate setting for any group. But I think Bobby Joe pretty much covered all the other factors. It's also a pretty small group. And remember too, that for the Vista 65, Medicare is subsidizing a fair amount of their rates. So that assistance also has an impact on the rates.
Jonathan, go
Suzanne,
ahead.
and just one other piece that's missing is they do not contribute to our net position. And so that's always a factor in the rates for us to build back what we had to take to pay the bills this time. But Chris can talk more about that as well.
So any other questions or comments for the group before we vote? So the motion is in your chat if you need to see it, but we are allowing VEHI management to file the rates through Blue Cross Blue Shield and allow the chair to sign the rate sheets for filing. And it's been seconded. All those in favor, please signify by aye. Aye.
Aye.
Those opposed? Okay, great. We have finished that one. So now we move on to Chris, who I will not forget. Our financial updates, please.
Great, thank you. So the first thing on the agenda for today is to engage our audit firm for the next fiscal year. We're almost at the end of June 30th is our fiscal year end for FY24. So we're engaging the audit firm, which is Johnson Lambert. Just to give some historical context and some context around the selection process. Until last year, we were with Sullivan and Powers, a local firm in Montpelier, and we had been with them since before I started in 2001. So we had been with Sullivan and Powers for quite some time. They did some restructuring in their organization. They had some partner changes, and they were no longer able to support our audits. So we went out to look for another audit firm. Johnson and Lambert had always been on the short list because you want to look for a firm that has pooling experience. You know, as a governmental risk pool, there are only so many of us in this state. They're certainly around the country. But Johnson and Lambert is a firm that represents many pools. Like over 90% of their business is insurance, and a huge percentage of that is the pooling industry. So, you know, they're a firm that has an office out of Burlington, so they're local enough that they can service us, but they also have that greater scope of business, which is really the business that we're in. So you want your audit firm to match up with that. So Johnson and Lambert, just so you know, we do, the VSBIT board actually reviews who the audit firm is going to be first. And it's just the nature of, we really should have the same audit firm for both VEHI and VSBIT. It would be very cumbersome to have different audit firms because VEHI has no employees. And so much of the day-to-day operations of VEHI really happens in the VSBIT offices with the wellness program, with finance, that the audit firm, you know, it's really a good idea to have the same audit firm looking at VSBIT as well as VEHI. If you didn't, you'd have to somehow create some other layer of audit relationship so that the VEHI auditors could then rely on the VSBIT auditors more fully. It only increases cost. It only increases, you know, both personnel costs and actual physical costs paying out to the audit firms. But we feel really, really good about Johnson and Lambert. Like I said, last year was the first year with them. I think they brought a lot to the table. You know, for me, working with Selvin and Powers all those years, that was a big change. Not that I was worried about it. It's just change. It's just new. But things went really smoothly, and they certainly know their business, and I think they bring a lot to the table. So the engagement letter is in your packet, and I would ask that you approve the engagement. Just from a fee perspective, they did come down. Last year, they quoted us, you know, it being the first year, a range of 30 to 36,000 for the audit. This year, even, you know, despite inflation, they're coming in with a quote of 34,000. And that's actually about $2,000 less than we actually spent last year on the audit itself. We were close to the 36 range last year for the audit. And I believe that's because, you know, some of the perm file documents, some of the historical documents that we have to get together the first year, they don't have to do moving forward. They will have those on their records now. So, any questions?
Yeah.
Yeah, before we engage, any questions from the board? Okay, so looking for a motion on that one, please.
I move to approve Johnson Lambert for the, what is it, the financial year? What's the timing?
FY24.
I move to approve Johnson Lambert as the FY24 auditors for VEHI.
Is there a second?
Second.
Okay, does anyone have questions or discussions about this? Yes, Lance.
I noticed the reimbursable expenses piece on the very bottom. Final installments will be sent on this date or the data report insurance, whatever is earlier. Additional invoices may be sent for reimbursable expenses after the final installment. Does that typically happen?
So they do
Get
bill us for
additional-
travel. It's mileage. They're coming out of Burlington. So
Uh-huh.
it's around maybe $500. I think it was in the $500 range last
Okay.
year. So
Okay.
that's it though. That's their only expenses.
Okay. Thank you.
I will say that's typical of audit firms for this type of audit. I see that in our audit proposals, engagement letters.
Any other questions or comments? So the motion on the table made by Mike is that we accept the engagement letter or something close to that. Maybe Bobby Joe could read it back
Yes.
if you have it.
Yep, move to approve the FY24. Move to, I think, I don't remember what the Johnson and Lambert part was. I put it above it. So move to approve Johnson and Lambert for the FY24 auditors for VEHI.
Okay, it's been the motion has been made and seconded. We need to vote now. All those in favor, please say aye.
Aye.
Opposed? Okay. So Chris, move on, please.
All righty. The next item on your agenda is the DFR, which is the Department of Financial Regulation audit findings. So the Department of Financial Regulation has to, by statute, audit us every 5 years. They can elect to come in more frequently. They have not elected to do so. We are on the 5-year schedule. This particular audit that they just completed is actually auditing the year through June 30th of 2021. So it's FY21. We're here in FY24. So all the numbers in this audit report are quite old to us at this point. They didn't even start till almost, I don't know, I don't even think they talked to us till almost the beginning of FY23. They just got behind. It wasn't any delays on management or on our side. It was fully their schedule in getting this report finalized. The good news in all that, though, is that when you go to the report, they basically had no findings. They were fully satisfied. There were no weaknesses. There were no recommendations even. You know, there's a couple of layers when you're looking at these audit reports. There's, you know, are they fully compliant? Have they been materially misstated? You know, you pass that first. That's a fairly high level threshold. You know, they have and then there's recommendations they can make. They aren't part of the audit report. The audit report is, you know, acceptable and fine, but they might find something that they say, you know, it would be best practice to think about this. And we didn't even have any best practice findings, which is a really, really big deal. Honestly, you know, for an audit firm to come in and have absolutely no recommendations is in itself, you know, kudos to the organization. But when you get that from your regulators, you know, that is just, for me, you know, it just makes me feel really, really good about things. And we're in a really strong position. You know, it's really nice to see that at that level. So, you know, we do have to accept this report. We wouldn't really be able to change it anyways. It's their report. But they do like to see in the minutes, DFR, that it has been reviewed by the board, that the board fully understands what the report was about, and that it has been accepted.
All right, thank you, Chris.
So
So that
any
means we'd like a motion. Well, you want a motion on that first, Chris? Yes, we need to.
Sure.
Okay.
Yes, please.
Do we have a motion to accept the report from DFR?
Yep, I'll make the motion to accept the report DFR.
Should we say it is as of June 30th, 2021?
As of June 30th, 2021.
Okay, do we have a second?
Second.
Thank you, Andrew. Okay, does anyone have any questions or discussion that they would like to probably refer to Chris on this report? Yes, Mike.
So I'd like to second, Chris, what you said, which is appreciation of no findings. I know that there's a lot of hard work over many years to have a document that doesn't say anything.
Yes.
So I appreciate that.
Thank you.
Anyone else? So the motion is to accept the June 30th, 2021 report from DFR. All those in favor, please say aye. Aye. All those opposed? All right, great, thank you. Okay, Chris, you're still
Alrighty,
on.
so great. So the next item on the agenda is to review the findings once again, and actually our response to the findings from the FY23 audit. So this is the Johnson and Lambert annual audit. We presented this previously, the FY23 audit findings and the report. There was one recommendation. As with DFR, the report itself was clean. It was a clean opinion. There were no findings on the report itself. They did have one recommendation that they made. It really affected VSBIT. So we needed to bring it before the VSBIT board first, although it was in your report as well. So in this page, I have first, you know, cut and paste what the actual language was from Johnson and Lambert. To summarize, basically what it is that we have a really, really small accounting department. There are two of us. So there's myself and my support person. who does, payroll and accounts payable and accounts receivable. And then, I do all the general ledger, sort of the staff account work, as well as the, general oversight and the management of finances. So when two people, it's very difficult to get a great segregation of duties in all places. So we have controls in place that we try to mitigate where we can. They came back with a recommendation that because I have admin privileges in my accounting software, I have, full capability of, company setup and journal entries and all of those things, that while John does approve the journal entries after the fact, I still have, a lot of control in that accounting software, which is okay, because if I didn't, it would make it very difficult for me to perform my job duties. So their recommendation is that we have another person have access as admin. They could go in and just, look at things occasionally outside of the function. They suggested the IT director. I think that makes sense. They said that they see that in a lot of pools, and they go to the IT director because they have the computer side of it. So if someone were to be trying to cook the books or do something over to the side in the systems, they might be the best person to catch something like that. So we have elected to adopt their recommendation, and we are purchasing another license with our renewal this year of our software, which actually comes up in about 3 or 4 days from now is our renewal date. So we will have an additional license that's been purchased, and the IT director will have that license, and then I will go over some things so that they know exactly where to look. And then they can go in and spot check as needed. So, and that will fulfill their recommendation. That was the only recommendation that was on the VEHI management letter.
Is there any financial implication for VEHI since
So
Visbit
to purchase
purchased the
the additional
license?
license, it's shared. So
Okay.
I can get into this more when we do budget, but I'll give you just trying to do a quick little overview. So, Visbit has its multi-line program, its unemployment program. VEHI is the TPA, we're the TPA for VEHI, which runs the health and dental programs. We have the wellness people, which are part of VEHI staff, Bobby Joe, who's VEHI really dedicated staff. A portion of myself and my support person, Angela, gets allocated to VEHI, a portion goes to Visbit. So what we do is we look at an FTE count overall. So you're allocating out to all the different programs. And when I say programs, I'm thinking, from my perspective, I have VEHI, I have multi-line, I have unemployment, I have our school management resource center. They're all programs, even though technically I know VEHI is its own entity. But for this exercise, it's just another program. And you look at all the FTE counts, and we use those percentages that are derived from the FTE to apply to some of the overhead expense items. So computer expense being one of them. And this falls under computer expense. So the license cost about $2,300 in total. And about, in round numbers, I'd have to look exactly what the FTE count is for this year, because the budget's still being developed. But in round numbers, it's about 1,000 of that is VEHI. Maybe a little less than that, actually.
At this time, Chris, is there any?
What's that? It's about 1/3. So
at this time, is there any action we need to take on this?
I think it would be good to accept the findings. I think a motion would be good.
Okay, do we have a motion to accept the findings of the auditor for this recommendation? Yes, Mike?
Yes, sorry, just a note. I think we are accepting the response.
True. Sorry.
Right.
Yes.
Yeah. So I move to accept the response to the finding in the FY23 audit.
Second.
So, to be clear, that is, if you looked at the one-page memo, it's basically what Visbit, the action below the box.
Yeah, I'll restate
Yeah.
my motion. I make a
Okay.
motion to accept the response dated May 13th, 2024
Mhm.
from John Steiner and Chris Roberts in reference to the finding from the FY23 audit.
I second
And I
that
feel
too.
Oh, great. Thanks, Lance. So perfect. That's very clear. We know exactly what we're voting on, which is to purchase our share, putting in the money for the additional IT license. Any discussion or questions? Mike?
Yeah, so in my day job, I am an IT weenie. And I think this is an appropriate response. And I do like that plan, especially it's not because of Chris, but you do want
Mhm.
somebody else to have the keys to the kingdom to your financial software, so that one person can lock out the other. And if there's something happening, and Johnson Lambert would come in, and I wouldn't expect the IT director. Chris, do you really think the IT director is going to poke around? Because
Yes.
yeah, you're going to
Yes.
train them on what to do.
Yes, I'm going
Cool.
to show them where company setup is. The biggest thing, right, is that you go in and you set up companies. And to me, one of the biggest places that I hear about, people who have embezzled, they set up a second set of books. So you want to make sure that the company setup is intact the way it should be. And then from there, I'm actually going to do a really big tutorial on doing there's some like audit reports they can run on journal entries, like everything's sequential. You can't assign journal entry numbers. You can't assign, there's a lot of things you can't, that Intact, our software is called Intact as well. So there's a lot of things that the software locks down automatically. I'll talk to them about some of the things that, this sequential numbering, so you can't set your own numbers. And then they can run reports that'll show like all journal entries for the period, all invoicing for the period, all this for the period, so that they can spot check those things. So yeah, I feel that we have an IT director who will take things very seriously. And I always look at these things. I know that in a lot of ways they're to protect against my role in the organization, my job description. So I take that very seriously, because I'm going to be around for a while, but someday I'm going to retire, and I want to make sure that I know me, but I don't know my predecessor. So I want to make sure all of our controls are in a really, really good place. So,
And so that what you're training the IT director on will become a process. You're going to document that, and they're going to do it on a regular basis.
Yeah,
Right.
it'll have to be
Okay.
a procedure, and then the IT director will need to document when they do certain reviews, not to me, but they need to document it so that they can provide it to Johnson and Lambert when they come in and say, yes, this is what I did. Here's my my log, of what I did, when I did it, what day.
Great. Thank you.
Anything else from anyone? Okay, let's vote, please. All those in favor?
Aye.
Aye. Opposed? All right, thank you. So Chris, we now have the 331 financials.
Yes. So in your packet, we have the financial statements. Would you be able to bring those up on screen, Bobby Joe? That would be great. So she'll bring those up while I start talking. So I produce quarterly financials for VEHI, which I have before us. The flow of the packet, you can skip over the memo, but the flow in the packet is a combined statement of net position, which is basically your balance sheet. Then we have the next statement is actually the income statement. It's called the combined statement of revenue, expense, change in net position. And then lastly is a budget to actual. So just to kind of give you a flow of our financial packet. I'm just going to kind of go over some highlights here, starting with the net position worksheet. One thing to take of note is that these are comparative. So the way these flow is we have in the first column, we have the health program. In the second column, we have our dental program. There's a total, all locations, which is your health and dental combined. Then you have a column as of 3/31/2023. So as of 1 year ago, what those balances look like, and a percentage variance column. So that gives you a comparative snapshot to see how we are performing year over year. From a balance sheet perspective, you're basically looking at our biggest asset is cash and cash equivalents. We keep monies in our checking account and to pay claims, and that actually sweeps out to Wilmington Trust. So that's a money market fund. That way we get a little bit better earnings than just certainly leaving it in a traditional checking. Then the balance of our money is at the Vanguard Group, and that is held between a short-term bond index fund and a total broad stock market index fund. So basically 2 index funds that are mirroring the entire market. One is bonds, one is equities. And as you can see, we have in cash and cash equivalents about 61 million. Last year, we were at 72.4 million. So we're starting to see some of these losses that we've experienced in the last couple of years hitting cash flow. You know, in the beginning, some of the losses are just in liabilities, so they haven't been paid out. Now all of those are getting paid out. So you can see our cash and our cash equivalents is down 16%, which we would expect based on the way the health program has been performing. Contribution receivable, that's the amount of money that is due from our members. So that's up, but that's just a matter of timing. No concerns there. Everyone is paying. You know, it's just, sometimes it just matters whether they pay on the 31st or the 1st. The other receivables are just a spot, that's money that's due from Visters. And then our other assets are a working fund deposit at Blue Cross Blue Shield, because Blue Cross Blue Shield processes our claims, makes those payments ahead of time, and then we reimburse them on a weekly basis. So they hold a fund about 1 week worth of claims so that they can pay those out and then be reimbursed. So they aren't holding the checks to the providers, waiting for our money to come in. On the liability side, we mostly have claims related liabilities. So that's claims that it's representative of the last week of claims. Usually in a month doesn't get paid till the following month just due to timing. So that's part of that number. And then also the actuaries look at what we look at is called incurred but not reported. So those are claims that people have gone to the providers, they've gone to the doctors, but the claims, it's their estimate of what the claims have been submitted, not been submitted yet, but actually incurred. So I book that each month from the actuaries. Prepaid contributions are for those members who paid early. And then we've got a little bit of AP and a little bit of other liabilities, a little bit of money due to Visters there. Our net position is, we started the year at 44 million, 44.6 for the health program and 6.7 for the dental program. So far as of 3/31, we have lost 3 million on the dental program and have a small gain of 297,000 on the dental program. So bringing us to a net position of in total of 48 million, 48.6 as compared to 61.3 million last year. So our net position is down 21%. So this is really the summary of the picture as to why the rate increase is what it is. You know, it's just the last couple of years we've had some losses. So you know, we project, you know, and it's really claims driven. If you want to go on to the next page, Bobby Joe, the income statement. here you can kind of see what drives our financials. You have your contribution revenue up top. And we really don't have any member interest for VEHI. It's just these statements are used for both VSBIT and VEHI, the format. So it's really just contribution revenue for VEHI. And, that's up 11% overall from last year. If you come down and you look at your claims related expenses, you can see those are up 16%. So we've got an 11% increase in revenue. We've got a 16% increase in claims. And claims is really your biggest expense. That's the huge driver. I mean, if you come down to about 3/4 of the way down on the page, there's total operating expenses for the health program are $244.7 million. Of that, if you look at the total claims related, you're at 242.3. So you can see, 242 is claims out of 244 overall. So, that claims are what drives our financial statement, our profit or our loss in relation to our revenue. Our other expenses are in line with our budget. We have our VSBIT admin expense. So that's the contract fee that you pay to VSBIT for its services. That includes the wellness team, Bobby Joe, and like I said, a portion of IT, a portion of accounting. And then you have the, we actually do a true up. So there's a VSBIT admin expense prior year. So because of the complexity, we base the fee each year on our budget. And then once the books are closed fully for VSBIT, we go back through, I go back through and I do a true up and I put the actual expense against those same percentages, just like I did at the beginning with the budget numbers. You run the actuals against them and then whatever variance is booked at that time. So what this says is that for FY23, VSBIT returned $46,513 back to VEHI because we came in under budget. And the prior year, we returned $56,000. So that's pretty normal. We do a good job of budgeting on the VSBIT side. So, we try not to run much of a variance at all, but traditionally, we do always come in a little under budget. So the money is a return to VEHI. It could happen one year that it's not that way, but we try really hard to make sure that we set our budget appropriately. The Vermont NEA expense is there, and that's the contract with the Vermont NEA for Mark and his associated support admin. We have some professional services. This is mostly actuarial, legal. We have a little bit of travel occasionally, not a lot there. Some, compliance and health support work we do. We have a little that the computer expense being reflected here. That's the actual VEHI website. You have directors and officers insurance that you have to pay as a board. And then we have just a little bit of other expenses. So you can see, all of our other expenses come to just under 2.7 million. That brings us down to the bottom line. We're running an operating loss of 6 million on the health program and a small operating loss of 202,000 for the dental program. When the dental rates were set, we actually budgeted for a loss. We have really good net position on the dental program. So we've been trying to sort of erode those reserves, certainly not add to them. So that's really in line. We actually are not at quite the loss that we had budgeted. I'm trying to find that number here. It's in my memo. We set to utilize $860,000 from net position when the dental rates were set. So we're at a negative 201. But we're doing really well with market change. So actually that's offsetting the loss and turning our dental program positive to the tune of 297. But at least that's, it's in line. the health program, when we originally set these rates, we thought we were going to have a $3.3 million gain in this fiscal year. Then when the rates were re-looked at, when we set the FY24 rates, they look again. And at that point, they said, no, we're going to actually lose 7.7 million on operations this year. Now, this number that the actuaries quote is before interest and market changes apply. Or actually, the actuary said the actuary said 7.7 million on the health program. I expected we'd, come in with at least 700,000 in interest and positive market change. So bottom line, 7 million loss. Now, I have some more news since the writing of this report that just came in on Friday. So I do want to share that. Now that the Vistas renewal is done, now that we've looked at the FY25 rates, we asked Blue Cross Blue Shield's actuarial staff to go back and re-look to see if they still felt like the $7.7 million predicted loss was going to hold. I've been a little concerned because I'm looking at the numbers here. And if you look, we're losing 6 million now. At this time last year, we had a $3.4 million gain, most of which was the health program. I know that has dental in there too, but most of that was health. And then we turned around and last year lost another $10 million in 3 months from April through June. So when I look at those numbers and say we're already at a negative 6 million and last year we lost another 10 million in that quarter, I mean, does 7 million still hold? 7.7 million still hold? Makes me nervous. And unfortunately, it does not. So now they are saying that claims is up another 1.7%, which is $4.8 million. So they are now projecting, instead of a $7.7 million operating loss, they are expecting that we will end this fiscal year with a $12.5 million operating loss. Now, luckily, market's helping us some. We've got about 3 million sitting there as of 3/31. But unfortunately, market change, the interest holds. The market change does not. In April, we lost 700,000 in market change back against the 1.8. So that's a moving piece too. So, we're looking at a unfortunately, another poor year by year end. We look at this number in relation to, there's a target that we have, our net position policy, and our target is 15%. So we've been below 15% for a few years now. We expected to end this year at 11.5%. And what that is that's a percentage of what our net position is compared to our annual expenses. So we were thinking we were going to end at 11.5. If this $12.5 million loss is realized here, that brings us down to 9.9%. Once we get to 9%, there is a trigger in that policy that says that the management team will need to provide a written plan to the board as to how the net position will be rebuilt over time. And that needs to be approved by the board. And then that would be filed with the Department of Financial Regulation. So, we're getting close to that trigger. Just want to make the board aware of that. Lastly, the last document, I'm not going to get into a lot unless there's specific questions on it. It is the budget to actual. So this really lines out every single line item. Your financial statements are more summarized. When you come down to your general operating expenses and your wellness expenses, it really shows you line by line by line where every dollar is being allocated. I look at this, everything's pretty much running as we expect. Member contributions are 25% left for the year. That makes sense. We're 75% done for the year. Claims related expenses, again, at 75%. The general operating expenses were actually down. We've spent 63% of our general operating expenses. So everything is in line with budget. So any questions? I think that's my presentation.
I had a question.
Okay, I can't see everybody. I don't know about Bobby Joe. Maybe we stop screen sharing. That would be great. Okay, so I'm not sure who raised their
I had
hand
a question. Lisa.
first.
Oh,
Okay,
sorry.
Lisa.
My question is, what, if anything, needs to be done in order to, I mean, is there any way to avoid the 9% trigger, or are we bound by what we agreed to prior? And so we just have to have it play out. Am I off?
Well, I wouldn't recommend that we can relook at the policy, okay, at any time as a board, the net position policy. We just had that review done with Towers Watson to actually look at those numbers again to see if our target in our policy was appropriate. And they came in, because the first time it was done by a different actuary. So we had a different actuary come in and relook at the policy to make sure that the target still made sense. And it did. I mean, they had some slight recommendations, they put their spin on it, but the bottom line is that they felt the target was appropriate. And so we've done that work. We also, if we were going to change that policy, it isn't a policy that has to be approved by DFR. So the department would have to buy into any changes we made to that policy. Just from a management perspective, from my recommendation, I wouldn't suggest changing the policy because the actuaries have supported it. I wouldn't want to to me, it would be arbitrary to just lower the trigger amount.
No,
That's almost like
no,
kind of
no,
putting
no.
your blinders on and saying, well, I know we're supposed to be doing something here. We really should be thinking about this, but we're just going to ignore it. That's only going to get us in a worse position. So I feel like the policy is appropriate. So
I guess I wasn't clear. I guess what I was asking was, is there anything we can do at this point in order to make sure that we stay above the 9% trigger?
well, I think that it's when you set your rates. And unfortunately, well, there's a couple pieces. So the first thing is that in the short term window, it's how you set your rates. Right. Because, and unfortunately, you set your rates so early that things can change that we can't necessarily foresee, and other things play out. So, if I go back to my story about, when we set FY24 rates back in 22, this is what we thought. And then we relook at it again, and this is what we think. And now we look at it again, and we have a different picture because the market, the claims have played out in the way they have. We've had hospital budgets that change. We have high cost drugs that come out that they try to budget for and the actuaries look at, but sometimes there are things that happen that we just can't project. There's a lot of talk around, what can you do? I mean, then we have our administrative expenses, which we can control. Okay, when we set our budget, we can control our administrative expenses. However, those are pretty small. So even if you try there, we spend a couple of million on wellness. Wellness more than pays for itself on its return to us. So, it doesn't make sense to cut wellness. But even if it did, it would only be a drop in the bucket. I mean, to really control the expense side, it's claims driven. So what can VEHI do about claims? And that's a much broader topic that, Bobby Joe and Mark, think about all the time. I know Mark spends, I think, most of his waking hours, thinking about this. It feels that way. Things like risk-based pricing, things like, some of these other initiatives that they're talking about in the legislature, trying to bring some control in over pharmacy costs. You know, those are the things that affect the other side of this. And so those are bigger. So really, you know, I mean, my message is that we always, when we sit there and budget, you know, in the short term to protect VEHI in the short term, we always have these conversations about how much are we going to add to our reserves. Okay, so we look at what the actuaries come in and then we have this conversation. Do we need to build in a percentage or two more for reserves? And there's always a lot of pushback, and that's a hard pill because of exactly what we're seeing playing out with school budgets right now. We're passing along large increase. That's people, that's positions. It's a hard thing to deal with. But that's basically, you know, we're trying to run that fine line, and we've been obviously running it so tight that we, instead of building reserves or even maintaining reserves, we're eroding reserves every year. And that is not a sustainable thing.
Thank you.
Okay. Andrew, I think you were next.
Real quick, you might have answered it. I guess
Sure.
It was a lot about like, how do you know, with the increase in claims, like what can be done to offset that or to control that more, and maybe that's a bigger discussion. So I was just curious, was it indicative of an aging population? Is it indicative of lots of different things? I don't know. So
there are a lot of factors, and I think others on the management team may have their hands up to add to that, because I noticed Bobby Joe and John are both there. So I'm gonna let them speak to that a little bit. Bobby Joe, I think you were next.
Sure. I just wanted to, so last year when we were setting the rates, and by last year, I mean last fall, we were actually looking out to not just the end of FY24, which is coming up in a couple of months, but actually FY25 as well. And we were, again, trying to look at the 15% target. And, you know, because we were already facing a 13 something rate increase, we did add 2.6 to the rates to put into reserve. So that was aiming toward 14, because not everyone on the board was ready to make the leap to then have it even higher at 17 something to try to get to 15%. So do you think that that's going to help our position by having the extra 2.6 in there? Or is it a little too late? What do you think about that?
I mean, theoretically it should, because when they set the FY25 rates, they knew all the information. They, meaning the actuaries, they had all the information. They just hadn't gone back and applied that all new information to FY24 yet to give me this number. Okay, but they're working off the same assumptions to finish FY24 that they had when they created the FY25 rate recommendation. So unless something changes or something new crops up, we really should add to reserves in FY25. But just unfortunately, the last couple of years, there have been some unknowns that have happened. So we just those are the things that you're just not sure. And they've been unknown. And so unfortunately, anything that we have tried to add to reserves has been eaten up. But theoretically, we should add to reserves in FY25. But I think, John, did you have something to say, or?
I did, but it was exactly the same thing Bobby Joe said.
Okay. Cheryl?
Thanks, Chris, for all the information. I think it would be really helpful in maybe September to run through this at a VASBO meeting. I think it would be really helpful for folks to understand what's really going on here, heading into what's going to be another difficult budget season. Hate to call it a season, but it is, or a year. I think it would just be helpful for everybody who's going to be working again and might be dealing also again with a significant increase in health insurance to understand how this all comes together. And maybe a September meeting might be the time to do something like that. Just a thought.
Okay. Yeah.
You see Lance, Chris?
Yeah,
Oh, sorry. I did not.
yeah,
Thanks. Go ahead.
that's right. I just barely raised my hand, Chris.
Okay.
I'm just looking for maybe a little institutional history here.
Sure.
Have we hit the 9% before? Have we gone through this process at all or no?
I would have to go back and look for sure, but I don't think so. So, all right. So there's two separate questions. Have we been through this process? No. That's a definite no. This policy with these targets and these sort of ranges and these trigger points is relatively new policy in organizational terms. So I don't remember the exact date on the policy, but maybe around 2017, 2018, somewhere in that range. Okay, Mark's giving me a thumbs up. Sounds right. So before that, we just had this sort of one target number. We said, you know, at one point it was 20%, and then we said, no, that's probably a little high. And then it was 15 to 18%. And we sort of settled out on 15 a while ago, but we really didn't have a very official policy. And it was actually the Department of Financial Regulation, when they did their audit, that they said we need to firm this up a little bit more and to have these trigger points in our policy. So we created that. As far as the 9%, have we ever hit 9%? I don't think so. I don't think we've ever come that low. Yeah, Mark's shaking his head too. That's what he remembers. So yeah, I don't believe we've ever done it. So yeah, we're looking at being at a low point on reserves for the program.
Okay, thank you.
So I just want to add, I just put it in the chat. Oops, maybe I just sent it directly to somebody on accident. I will send it to everyone. The policy, and at the end of the policy, there is actually the fiscal year ending from 21 through 18. And there was a couple times that we dipped down below 10, but it, like Chris said, it didn't trigger these action steps that are now in place.
Mike?
Thanks. Lance, just for historical, at the last 2 years, our discussions around net position have been, what should the number be at? And when should we use that to help pay down some of the rate increases? But we never discussed going as low, you know, this low. It was more around, hey, is 15% the right number? Should we increase it to 17%? Should we dip down into like 13% for a financial year, but not as low as 9?
And we may not get to 9. I mean, that's the other thing. We're at, you know, if this plays out the way they're suggesting, we're at 9.9%. So that's almost 10, you know, 9.9. And then if the FY25 rates come through as we expect, and the claims stay where we have projected them, then it will be a rebuild. We will start to rebuild a little bit. So we may not be triggered. I want to alert you at this point to that potential.
Any other questions or comments for Chris on her March report? Well, then I would suggest we need a motion to accept Chris's March 31 financial report.
I'll make a motion to accept Chris's March 31st financial report.
I'll second
March
it.
31, 2024 financial report.
Okay. Been moved and seconded. Is there any other further discussion? Okay, hearing none. All those in favor, please signify by aye.
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 Those opposed? Okay, thank you, Chris. That was a very thorough and interesting discussion, if not a little alarming, but thank you.
Yeah, sorry to bring the bad news.
No, we need to know it now. We'll know it sometime.
Yeah.
Okay. So now we're on a series of management updates, which I'm never quite sure who's going to be speaking to. I'm going to start with Hinge first. Would that be Mark, who's smiling?
I think I got the first three on this list. So
Okay.
Bobby, Joe, John, and or Chris, by all means, please feel free to weigh in. So for Andy's benefit in particular, Andy, Hinge is a national company that does virtual physical therapy. And we were impressed with the program. They were introduced to us by Blue Cross Blue Shield of Vermont. And we've decided to independently pursue a working relationship with them. And for the board as a whole, we are now I think it's fair to say that we hope we are in the final stage of contract negotiations with Hinge. We've had a lot of back and forth with our attorney, and the Hinge legal team has also looked at our recommendations on 3 pertinent documents in this regard. And there is one last outstanding issue. The management team will speak about it tomorrow, and then we will probably make another counter offer to Hinge on that matter. If all goes well, and I'm anticipating it will, we should have a contract settled with Hinge in the very near future. If it doesn't, we'll let you know. Bobby, Joe, and John, anything else you want to add to that?
I would just add for anyone's edification that we did have approval to move forward on this.
Right.
So we won't be looking for any further approval from the board unless something changes.
And assuming again that the contract negotiations end the way we anticipate they will then begin working with Hinge on a rollout schedule for the program and the educational components that go with that. That'll be a somewhat involved process, but we've already done a little talking with them in the past about that. So we've got a good foundation. The next issue is reference-based pricing. And this is, and Chris alluded to this in her remarks. Reference-based pricing is a methodology for determining a fair and objective way of pricing inpatient and outpatient hospital claims. VEHI's greatest expense claims-wise, and claims, remember, refer to pricing for services and utilization. Our 2 greatest costs in this realm is hospital. By far, really, about 55% of our costs are inpatient and outpatient hospital expenses. Our second biggest cost is RX, prescription medications, which comes in at approximately 20% of our total claims cost. So this board, and again, Andy, and also probably also for Lance and Cheryl, this board has had presentations in the past on reference-based pricing by myself and by Marilyn Bartlett from the National Academy of State Health Plans. And it speaks to pricing your inpatient and outpatient charges, again, hospital-based, to a Medicare rate. So reference-based pricing benchmarked to Medicare. Commercial plans pay significantly more on average than Medicare does for inpatient and outpatient services. Well, a reference-based pricing analysis is for the purpose of determining, is there a fair price between what commercial pays and what Medicare pays? Thus, you begin that process by benchmarking your charges to Medicare. The Green Mountain Care Board, in part through my advocacy and others as well, has taken a very serious interest in reference-based pricing for hospital inpatient and outpatient claims. And over the last 2 years, Vermont NEA and the Vermont State Employees Association, 2 largest unions in the state of Vermont, have urged the legislature to appropriate funds to do a reference-based pricing analysis of hospital claims for school districts and for state employees. And that initiative has also been strongly supported by the state treasurer's, state treasurer's office. No, excuse me, state auditor's office. And this year, the legislature appropriated $15,000 to conduct a reference-based pricing analysis of state employee and school district hospital claims. That analysis is going to be done by the Green Mountain Care Board in tandem with RAND. And RAND is on the cutting edge of hospital transparency and accountability studies. In fact, just today, they released their 5th major national report, and it has an appendices that includes Vermont hospitals on hospital pricing, what explains them, and what the trends are in that arena of healthcare. So at some point later this year, the Green Mountain Care Board analysts and RAND will be undertaking a reference-based pricing analysis of hospital claims for school districts and for state employees. And that analysis will then give us some additional information on how we as an organization want to proceed, if we do, with reference-based pricing benchmark to Medicare. So more to come on that in the near future. Prescription Drug Affordability Board, Chris also alluded to this. Thank you, Chris, for helping lay a foundation for me. So long story short here, in 2019, Maryland became the first state in the country to pass legislation to create a Prescription Drug Affordability Board, which is a regulatory body in Maryland that would set and ultimately investigate what's driving pharmaceutical costs, and then ultimately try to cap what the state of Maryland pays for high cost prescriptions. I began pursuing an interest in PDAB legislation in 2019. And we might very well have been the second state to have accomplished that, but for something called COVID. The pandemic pretty much brought a lot of healthcare reform initiatives to a standstill. And in 2020, we submitted legislation with allies in the legislature to create a Prescription Drug Affordability Board for Vermont. Again, we couldn't get it passed because of the states grappling with the pandemic. And this year, in 2024, we resubmitted legislation to create an entity like PDAB here in Vermont, except it would be housed under the Green Mountain Care Board. We didn't see the necessity to create yet another regulatory agency. We have one. The Green Mountain Care Board was very supportive of PDAB. And the legislature, in fact, has conferred authority now on the Green Mountain Care Board to establish a framework and a methodology for implementing a program to control regulate and control pharmacy costs here in the state of Vermont. It just passed. We do not anticipate a veto by the governor, and the legislature also appropriated additional money for the Green Mountain Care Board to hire staff to do this work as well, and also gave them appropriations to consult with experts in the RX field to be successful in this endeavor. So 2 big developments in this legislative session: a reference-based pricing analysis that will be forthcoming from the Green Mountain Care Board, and authority being vested in the Green Mountain Care Board to begin addressing the very high cost of prescription medications, most of which is driven by specialty medications, which account for, I think it's 55% of our pharmaceutical spend is driven by these specialty medications, the highest cost brand name pharmacy products on the market. And about 900 people account for that spend. So roughly 900 people on very expensive medications for very serious conditions, as a rule, drive about $30 million in RX spend. And that phenomenon is experienced in Vermont by other pools and payers. So having a regulatory body now within the Green Mountain Care Board to begin looking at how we can begin to regulate these prices is a very significant development. And as I said, Vermont NEA has been moving this for about 5 years. So I have if you don't mind, a very personal sense of gratification at this news. And the reference-based pricing project, also a Vermont NEA initiative, really began in 2021. So it's been a long road, but we are beginning to make progress. And to Chris's point earlier, if these really do materialize the way I hope they will, then we perhaps can begin to see some very significant reductions in costs at some point in the future. But again, that's a conversation to come and a road to travel. Let me pause there and see if there's any questions on those particular items. All righty, thanks. And I will certainly keep you informed on all of this as we move forward. The whole team will, for that matter, because this will certainly impact us. The next item here is update on discussion with the Vermont Commission on Public School Employee Health Benefits. John and Bobby Joe and I and Chris were all present for that on, I believe, March 26th. The agenda for that meeting is in your packet, so you can see the issues that came to our attention that we structured in that agenda. And that meeting was attended by the commissioners for negotiation commissioners at the statewide level from VSBA and also from Vermont NEA, and also advocates from VSBA and Vermont NEA. It was a very full conversation. We covered a lot of ground, a number of questions were asked. And I believe the commissioners are now speaking to each other about how they can continue to collaborate on addressing some of the systemic causes of high healthcare costs, like RX, like hospital prices, and also how they can interact with us and inform future discussions within VEHI on benefit design changes, which I think we will be having a conversation about at some point in the near future. Bobby Joe, John, and Chris, what else would you like to add on that point?
I think it was a good meeting where everything was on the table, and the fact that they put aside negotiations for a few years to just work together to try and come up with some kind of solution was really nice to see.
Yeah, I think it's similar to kind of what Suzanne said at the beginning of this meeting, which is, you know, the group trying to work more collaboratively together, which is great, both for our board and for the commission as well, to really just focus on what's, you know, especially I think we've seen with these high increases and the budget problems that folks have had. You know, everyone's just really trying to find a way to get these costs down, or at least stop them from going up as much.
And that reminds me to Cheryl's point before about education. I think I told some of you this, but the fact that the commission is not going to make any changes for 2 years, there's a misnomer out there with some folks who should know better that that means that health rates won't go up for 2 years. They'll be flat because the commission is making no changes. So obviously we need to better educate folks that that is not how it works.
And again, we do anticipate a much more sort of robust conversation with these folks in the months to come. And we will certainly keep you apprised of the content of those conversations and anything that comes from it. Chris, anything you want to add? You were at that meeting too.
No, I think you covered it. I think it was a really good meeting, and I think it was very informative. It was great to have everybody it was just a great brainstorming session and some background information, you know, the gaps in understanding that we could fill in. So very, very positive.
Yes, well put. And I would just add in closing on this topic that this is the first time this has ever happened. So we're all on new ground here, which is exciting.
Mark?
Suzanne, please.
You know, when I was reading through the agenda, they were, you know, in terms of the next steps, were there any formal decisions made about would they be meeting you know, what kind of schedule would they have in terms of us looking down the road to knowing that maybe some suggestions or requests of us are going to be made?
There was no hard decisions made about a schedule of future meetings. I came away, and again, Chris, Bobby Joe, and John, correct me if you think I'm misspeaking. I came away from the meeting believing that the two teams will be talking directly with each other. And in fact, that is happening. That I can confirm. I think Mike Campbell of Vermont NEA and Mark Koenig from VSBA have already met a couple of times. They're like the point people for their respective teams. And I think they're trying to determine how the two teams should structure their interactions and before they come back to us to talk about benefit design changes and other things of interest to them. So I imagine in the very near future, we'll be hearing from them about what they decided in terms of their interactions and how they like to proceed with us.
Okay, thank you.
Sure.
Anyone else for Mark or the team?
Now, the good news is I can stop talking. I'll let Bobby, Joe, or John take over the contract portion of this.
So we have 4 contracts coming up for approval and renewal for 7/1. And some of them are ready, some of them are not. So we wanted to kind of just talk through what they were and maybe take each one of them independently. So as far as the contract for Remedy, we did receive an updated contract from them. And I think the only thing that was changing was a small increase to their fee. I think it was an annual increase of $5,000. Yep. So it's going up $5,000, which will hold for the next 3 years. Is it 3 or 2, Mark? Sorry. 3. Yeah. Okay. Thank you. So we were all on, the management team was on board with that $5,000 increase. So we would look for a motion to approve the Remedy contract moving forward for 3 more years with the $5,000 increase, giving permission to Suzanne to sign that contract when it's complete and ready to go.
Is there a motion from someone?
I'll make a motion to approve the Remedy contract with the increase. Not very coherent, but.
Okay, is there a second?
Second.
Okay, discussion. So I have a question. So I think Bobby, Joe, and Mark, or any of the management team can say, what Remedy does for us is look carefully at prescription drug charges. And what I think I remember is that we've been able to recoup plenty of funds so that this is not a big cost driver for us, but is either cost neutral or saves us money. Is that correct?
That is correct. Remedy's cost savings to us occur in a few different arenas. First, they negotiate our contract with Blue Cross's PBM in collaboration with the Blue Cross pharmacy team. And that process, I think for all of us on the management team, has been very revealing over the last several years. They know how PBMs operate. They know the tricks of the trade. They know how to read these PBM contracts, which are profoundly complex. So we see savings in the contract terms, especially in respect to discounts and rebates and establishing provisions for tracking what PBMs are doing and holding PBMs to the contract. In the second area, they keep the management team on a quarterly basis apprised of where we're spending money in the RX field, where the trend developments are of concern or alarming, and where potentially we can reap some savings. And in the third arena, they audit the PBM every year. And sometimes this audit extends over a substantial period of time because these can be difficult conversations with the PBM. And the purpose of the audit essentially is to make sure the PBM is holding to the terms of the contract. We've been through 2 audit cycles with Remedy, one with Express Scripts and the second with Optum. And I believe cumulatively, those 2 audits returned to us $1.6 million, roughly. Money that Remedy was able to show that the PBM owed us by virtue of not honoring a discount, let's say, but hadn't actually paid. And again, that auditing process is also done in collaboration with Blue Cross. So the savings we have reaped from those sources have more than paid for Remedy services. And I would also add, and Bobby, Joe, and I were the beneficiaries of this, Remedy provided us with some very significant consultation services this year in the legislature when we were facing legislation that could have substantially increased our costs on the prescription side. And Remedy helped us to identify those problems in the legislation and draft a rebuttal for the legislature. And in one area alone, in one of these bills, our costs would have gone up minimally about $3 million. So yeah, Remedy's definitely paid off for us over the years. Mike?
My question is less about Remedy and more about how the board authorizes or services contracts. So we don't have a contract. We don't have a proposed contract in front of us. So what you're asking for is authorization for the management team to sign that contract.
Correct.
And that's the way it's been done in the past.
The Remedy contract that is, as Bobby Joe said, all that's changed in these next 3 years is the amount we're paying. The terms of the contract didn't change. The original contract did come for discussion to an earlier iteration of this board. We walked through all the terms, discussed the savings. Then we locked in the first 3-year agreement. The agreement rolled over for a second 3-year term. Again, I don't think there were any changes to the contract, or if they were on the edges. They were very negligible. And then we'd be rolling over that contract yet again. So the first 3-year contract was where we had the most extensive conversation with the board. Since then, there hasn't been any changes to the contract.
Mike, can I help answer your question as well? So the link in the agenda leads you to the Dropbox where the contracts live. And so I apologize even for the fact that for people like Andy who have not even heard of Remedy before. So I apologize for not being more clear there, that they are our consultant for prescription. In the past, Laura was considered the president of VEHI for a time, and she had signed the contract. This last term in 2021, Tracy did sign the contract. So I think it would go back to Suzanne to sign. The amount that we pay for fees in the last contract, they went up each year. The highest we paid for FY24 is $390,000 per year. So that'll be going up to $395,000 per year for the next 3 years. And as Mark has noted, we have saved millions over the years that we've been with them through the contract negotiations.
And Mike, if we can spend at a future board meeting time reviewing the Remedy contract or the salient points of it to give the board a greater understanding of what Remedy actually does. It's actually pretty fascinating. Well, I don't know if it's fascinating. It's at least might be of interest to folks to know what these folks are doing behind the curtain.
So I'm not questioning the efficacy of or the value of the Remedy contract. I've heard enough. To me, it's more about the mechanics of what you're asking the board to do, which is to authorize the management team to agree to an agreement or an SOW in this case. And the
Correct.
board is not being asked to review that. So like the audit letter, right, was pretty clear about here's what we're doing and here's right. What you're asking is just for authorization and to rely on your expertise to agree to the terms of the agreement.
That's correct.
Okay.
Well put.
And that's for all the subsequent services contracts in this agenda item, right?
That's my understanding, yes.
Okay.
Yeah, when there's not actual changes that we're requesting, it's generally just kind of a rollover. Do you approve the new increase or the new amount? So, but if you would like it to be handled differently, just let us know. We're happy to do whatever works for you.
There are questions for the team on Remedy. So we have a motion on the floor, and it's been seconded to authorize the Remedy contract for the next 3-year period. All those in favor? Aye.
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 Any opposition? Okay, good. We can move on to Gallagher.
So I have not received the updated contract or the updated amount for Gallagher yet. I am actually going to ask them for a rate hold. So Gallagher provides a compliance service for us. So we have a help desk that they answer questions for with regard to whether it's COBRA or Medicare reporting, W-2 reporting. There's lots of things that we try and help our groups with, but we don't necessarily have the expertise. So we hire Gallagher to be our help desk for compliance services. Right now we're paying them, I believe it's $72,000. Is that per year? I think it's $18,000 per quarter. And with it, I think there's been like up to $10,000 for additional services if they do any type of webinars or anything like that. We haven't had that in a couple of years, so we haven't utilized that. So I would request a motion to extend the Gallagher contract for one more year at the current rate. And then if they come back with anything different that I feel like it's worth it, I can bring it back to the group, or we could potentially say up to a 5% increase, something like that, if that works for folks. But I'm not asking for an increase in price, but I also don't want it to go on for 4 or 5 months if we don't meet again for a few months.
So would somebody make the motion?
I'll make the motion.
And Lisa, that is?
To
You mean what Bobby Joe said?
Yeah.
Bobby Joe said with the Gallagher contract, asking for a rate hold for the what are we talking, 25 now?
Mhm.
Why 25?
And should we add that that if there is a significant pushback from Gallagher, that Bobby Joe will come back to us?
Makes sense.
Is that correct, Bobby Joe?
Either that or that the management team has the discretion to approve up to additional 5%. Would that be okay? And that way it's something that Mark, Chris, John, and I all agree on.
I'm fine with that if you want to add that to the motion.
All right, so to be really clear, the motion on the floor that hasn't been seconded yet, so we probably need a second from someone first. Okay, thank you, Andrew. Is that we are going to approve a contract with Gallagher at its current rate. And if there is an additional increase that they are demanding, that the management team is authorized to increase that rate up to 5%. That's about it, yes?
Yep, that works for me. Thank
Okay.
you.
Is there any discussion or questions for Bobby Joe? Cheryl and Lance have their hands up.
Oh, sorry, Cheryl, go ahead.
Bobby Joe, did they give you any information about utilization? I mean, I do know that we still from time to time will utilize them, especially when annually the calendar year filings, 1095s and all that. Inevitably some question seems to come up, and they're a great resource. But I was just curious if the utilization of their services, how that's held up since we've gone further away, where districts are more used to having to do these filings and track the things that we need to track.
Yeah, I think that I don't have it in front of me. They are supposed to provide quarterly reporting, which is one of the things that I push back on them every year because I don't think that they're very good at providing that on time. So I can find out for sure. I think it is fairly low. It's one of those services that it's there for their convenience, kind of like, I hate to compare, but something like EAP, where you pay for this service for thousands of people, but how many times do people use it? So I think that there is a use for it, or there is a use of it. And we have had a lot of turnover, as you know, in the business office and in the HR office. So as new people come on, then it kind of bumps up again. So I can definitely get the get the utilization for you, but I don't have it at my fingertips. But I think it's definitely used, but it's on the lower side, I would say.
And do you get that out there? Do you do it with the V-Sharp folks about their availability in terms of a help desk and all that?
Yeah, anytime I send any type of notification out that talks about anything that requires compliance or might require compliance, I include that email link within that.
Okay,
within the email.
thanks.
Sorry, Lance. Go ahead.
Yeah, and when I was looking in the Dropbox, the most current one I could find, the contract with them was 2021, fiscal year 20 and 21. Is there one for the
Yeah, there
past
is.
couple of years?
Yeah, I'll dig them out. I'll put them in there. I might not have put them in there in the last couple of years. Thanks.
Oh, okay.
There was a transition of duties a few years ago, and sometimes it gets a little old. So that's on me, and I will definitely get those in there.
Yeah, because to Mike's point, I mean, it's like I like to be able to kind of look at contracts before I vote on them. I mean, to see what's in them, and I'm assuming that it's probably identical to the 2021 contract that's in there, right? I mean,
Yeah.
But I just like to be able to see them as well.
That's
Thank
fine. Yep, I'll see. I can put in there right now too. Chris, did you have something to add too?
Yeah, I just wanted to mention that when you talk about utilization of the service, just for the board's knowledge, the actual price that we originally negotiated was higher than it is now. So early on, when we were asking for more services, we were paying them more. And as the need has come down, that price point has dropped off.
Thank you, Chris. That's correct.
Sure.
Is there any other questions or discussion? Okay, hearing none. May we vote on the motion, which again is to authorize the contract with Gallagher at the current rate, and if need be, that the management team may increase that amount up to 5%. All those in favor? Aye. Opposed? Okay. Blue Cross. Thank you.
So Lance, I just want to let you know, I just put that contract out there for 23 through 25. Let's see, maybe actually maybe that was a 3-year contract and I was off one anyway. I'll go back and look. Let's see. Anyway, sorry. So the Blue Cross contract, Mark, we have what we need for the admin, right? So we have an agreement for admin.
Correct.
We haven't received any updates for Blue Cross, and it's up to you. I'm willing to wait until we have more information on this one, or we can move forward with us being authorized to make the decision. It's up. Where do you feel like we fall on this one?
We're going to be meeting again in June, is that right? Or do we not know that yet?
With Blue Cross?
We don't have any.
We don't have a meeting yet. Okay.
Oh, us.
The
Sorry.
board does not have another meeting scheduled.
And our contract with Blue Cross, Bobby Joe, expires June 30th. Is that right?
Mm-hmm. Yes. Although it's not unheard of for our Blue Cross contract to be signed after July 1st. So
we can extend it if we need.
Yeah. Do you have a feeling one way or the other, Mark, whether we should move forward on this one, or would you rather wait?
I'd like to wait a little bit till we had more conversation as a team, and also till we hear from Blue Cross about what might be on their mind as well.
Okay, that's fine.
And I'm wondering if it might change us here with the Michigan stuff.
Yeah, good point, John. That's a good point. John, again, it is alluding, remember, to the fact that Blue Cross Vermont is now a subsidiary of Blue Cross Michigan. And that could very well change some of the contractual dynamics.
So unless I hear go ahead, Mike.
Well, I would say if we're not going to act today, and you're going to need us to act by the end of June, let's before we close, let's put something on the books.
Yes, agreed.
Even if it's a 15-minute half an hour meeting.
Agreed.
Okay, so we won't do anything with the Blue Cross contract today. We'll schedule something for June. And then the last is the Vermont NEA contract, which is also coming up for renewal for July 1st. And Mark, correct me if I'm wrong, but my understanding is that is renewing as, excuse me, as is with a budget increase, which I don't know if you have sent over to Chris yet or not.
Chris has some numbers, but as she and I emailed each other last week, the numbers are not yet final because of contractual negotiations underway here at Vermont NEA. And so assuming let's assume those negotiations are not final by the end of June, then at some point there needs to be a motion to, how this will be done, but to continue the Vermont NEA administrative contract, assuming that's the will of the board. And the number would then be adjusted per the motion once those contract negotiations are finalized and we know what number we're looking at.
So I have a question is, if we are to schedule a short June meeting, and but Mark, I know your crystal ball about negotiations is a little cloudy. We could take both Blue Cross and Vermont NEA's contract up at our June meeting.
That was my thinking as well. That probably makes the most sense at this point. And again, if we don't have a final number in June, when we discuss it, we will craft the motion appropriately to address that.
Is there any objection to that from the other board members? Okay, then we are going to have to schedule a June meeting before our adjournment. Unless there's, oh, Mike, I'm sorry.
No, that's it. I just clicked it up. So I know that there's been discussion in the past about the services provided by the NEA. So I'm curious, Mark, do you see any significant changes to the scope of the agreement?
Sitting here today, no. I mean, it's possible, Mike, that as this Prescription Drug Affordability Board initiative rolls out and reference-based pricing becomes more empirically grounded, since we've had no numbers to work with in the past, that could expand or change somewhat the work that I do now. But other than those reform initiatives, I don't see any major change to the work that I do at present.
Well, you bring up a really good point, and I think especially for the new board members, that you wear multiple hats, right? You're employed by the NEA, but then you're in a services contract with VEHI.
Right.
And so, like, I was going to bring this up when we talked about your report, that some of the activities, your advocacy and political actions, sometimes you're wearing the NEA hat, right? And so a question that has essentially been raised over the last 2 years is, how political should VEHI be? That to me is the summary of it. And so that to me, it relates to your activities, right? And should any of those fall under the VEHI umbrella? You know, so
I think
that to me is a big fundamental question.
I agree.
Mm-hmm. We're also going to review the education report with potential action, and that may have, and Mark and other members of the management team are critical to some of the education activities of VEHI as well. So we may wish to modify those.
Correct.
I am personally thinking about it and prepping for this meeting. I was thinking, I'm fine signing the contract for the next year, and let's have some discussions about it, because I think that's a significant shift in responsibilities. So we should talk about it and deliberate on it, and look maybe to the following year to put that into the agreement, or we can always do a mid-year amendment if we think it's necessary. But like, I think it's worth, we're going to talk about a board retreat. I think that's worth a good discussion amongst us all.
Absolutely. And that also falls to what action, if anything, we take about our mission and our mission statement, and do those mesh? Okay. Anything else regarding that contract at this point? Okay, Mark, you're still up, your quarterly report, which everyone should have.
Yeah, Mike just had a spoiler alert there. So my quarterly report is now up for formal discussion.
And you know, the 57 pages of the board packet are more than half taken up.
Yeah, this is the Moby Dick of board reports. Basically, I'll do what I always do when we get to this part of the agenda. If you have questions, concerns, issues around the quarterly report, any part of it or all of it, I'm happy to take questions now. If not, we can move on. It's the board's pleasure. Michael.
Thank you.
Mike.
Sorry, everybody. I always have questions about Mark's
But
report.
that's your superpower, Mike.
So there was a note in there about escalating something around out-of-pocket payments for contraceptives.
Right.
I'm curious, how did this come to your attention? Is this something that a board, like a member brought to you?
Well, unfortunately, we wish it had just been a member. The Department of Financial Regulation issued a consent order that impacted every commercial insurance carrier in the state of Vermont, Blue Cross, Cigna, MVP, et cetera. And long story short, DFR discovered that the carriers had misinterpreted and misapplied legislation around contraception. There was contraception legislation here in Vermont and at the federal level that would waived out-of-pocket cost sharing for contraceptive services and products. And the carriers didn't interpret the legislation correctly, according to DFR. People ended up paying for contraceptive services that they should not have paid for as a result. And DFR ordered that these people be made whole. And so VEHI was informed of the consent order. We read it, of course, and then began a series of lengthy conversations with the Blue Cross team about how to make our subscribers, whole, who were negatively impacted by this error by the commercial carriers. It wasn't our error, but we have to make these folks whole. And so we've been working with Blue Cross to identify who was impacted by this, going back as far as 2017. And it's both active members, largely active members, but we also have some retirees and visitors as well. So that's how the matter came to our attention. And interesting you should ask, because we just had yet another meeting about this last week with Allison Plant, our account manager at Blue Cross. And we are in the process now of, we're just about prepared to submit to DFR the second plan that we've come up with for making our subscribers whole who were negatively impacted. We proposed a plan to DFR 3-4 months back. They liked most of it, but didn't like all of it. So we had to go back and refine it. And we needed additional documentation from Blue Cross before we could do that. And Bobby Joe and I and John have been working closely with Blue Cross to finalize that second plan. And I anticipate sometime next week that we should be able to send DFR all of the relevant documents that are going out to subscribers and our plan for communicating to school districts, active school employees and retired school employees about this consent order and their rights under it and how to be made whole if they were impacted by it. And it's been very complex, as you can imagine, because of the time span, the fact that there are HRAs and HSAs implicated in all of this. So that's our contraceptive project.
Okay, thank you. My second question is around the PB, the pharmacy benefit manager. I think it's the pharmacy benefit managers. You had talked about it earlier in this call, and in your report you referenced H233. Was that did that change, the number change, and it got folded into another bill? Because I couldn't wasn't
Uh,
clear to me that that was passed by both houses and is now waiting Scott's action.
That's a great question. I'll look into that and get back to you and the board on it. My understanding is what survived in that bill. The provisions that we took exception to
Yeah.
were not passed. That's good news. Despite the fact the legislature was trying to do the right thing. Second, my understanding is what survived fundamentally in that bill is a study committee to look at creating a wholesale RX purchaser and distributor for the state of Vermont. So rather than all of our payers or most of our payers using a PBM arrangement through a carrier, the state would either create or contract with a wholesale distributor that would buy prescription medications at the lowest price possible, and then add to it a small dispensing fee to reimburse pharmacists for dispensing these medications. Other states are looking into this or have done it in some cases for their Medicaid program. So the state of Vermont is going to explore that wholesale distributor idea. My understanding is that's the only thing that survived in that bill of any real import, but I'm not entirely certain of that. So let me do some research into it and I'll get back to you.
Okay. Thank you. That's it for me. Thanks, Suzanne.
No problem. Thank you. May we move on? Anything else? Okay. So the next item, number 11, is annual review of our investment policy and what we call the VEHI mission. And this was alluded to when we were talking about the work policy, the work schedule, annual work plan, is that we have a number of policies that we need to review on an annual basis. And I think it was Jonathan who kindly suggested if we made a start on it, DFR would not be hounding us too heavily if we actually came up with a plan. And I'm not sure how we want to deal with this specifically, because we do have on our agenda an item about a board retreat, which I think is an opportunity for us to have an in-person meeting and talk more in depth about a number of items. But I know we really probably should at least look at the investment policy today. I don't know what our management team thinks right now. Bobby Joe or Jonathan in particular?
Yeah, and I think Chris will probably take this one, but I think this one rose to the top because Mike was had mentioned about having this policy reviewed. Is that accurate,
Yes.
Mike?
Right, we had reached out to the firm that was doing the VISBIT policy. And
Yes.
Chris, they still have put us off on VISBIT. They said, yeah, we'd love to do it, but they're running way behind.
Yeah.
Yeah,
Now it's
before
supposed to be
before
end of
you go, I'm sorry, before you do that, I just want to interject for the new members. This was a review supposed to be done at a prior meeting, and I had asked, hey, do we do any review of our investment policy as per our investment strategy? And so the discussion was, oh, VISBIT's about to head into a review. Why don't we wait to see the outcome of that before we move on to VEHI? Sorry, go ahead,
So-
Chris.
Yeah, so at this point, I still think it's on the table to think about the VEHI board could engage someone to look at their investment strategy. Or we can take the findings of VISBIT first and then sort of talk about those and then see if we just want to apply that philosophy over to the VEHI funds, or if you want to have your own independent review done. But in the interim, I think it's good to look at the policy as it sits right now, get that approved for another year. I mean, there's nothing to say we have to wait in a whole other year either. If we decide we want to change the policy, you can change the policy at any time. But I think it would be good, like Suzanne was saying, we have lots of policies that are supposed to be reviewed annually by DFR, and we're sort of behind on these. So if we could look at this one, I think it's a pretty simple policy. I wouldn't make any recommended changes at this moment. unless, you know, the board wants to, but I don't think we would change anything without some sort of more formal review anyways.
So what I might ask, Chris, we really have two different kinds of investment funds, Class A and Class B, and how that they're dealt with. Could you give us maybe a quick, you know, overview in your opinion of
Sure.
what we have there?
Sure. So the Class A funds are our operating funds that we need to pay claims. So basically what that is talking about, it's the money that is sitting in our checking account. And it is a significant amount of money because you can have a weekly claims run up to $12 million. Some weeks it comes in, it's $5-6 million. Some weeks it's $12 million. So depending on, you know, if you have even a slight delay in the billing going out from Blue Cross, a 1 week delay in billing, well, that can throw the whole payment cycle off for our membership, you know, with board warrants and approvals at some districts and things like that, and timing of payables. So, you know, sometimes you can dip down, depending on, you know, very quickly, you know, with a weekly claims run being that high. So what we do is we don't just leave it in a standard checking. We actually have a sweep tied to it. It goes out to a Wilmington Trust, which is through the bank. It's who the bank partners with. That gets invested in a Dreyfus money market account. So that gives us a better return on those monies. And the actual claims are paid physically out of that trust account. So money as needed, as excess money sweeps out of the checking, goes over there. That's your Class A funds. The Class B funds are the monies that we have at Vanguard. And so those are monies that we try not to touch. You know, it's there, it's invested. That way you don't have to worry about market change. You know, if something's high, something's low, you know, those are more our surplus, our reserves are more over at Vanguard, or what we think of those. Over there, we have a mix of two portfolios I mentioned earlier, actually. They both mirror the entire market. One is a bond index fund. One is a equity index fund. So nothing managed on our part, you know, just overall funds that mirror the market. And our split is 75% in the bond fund, 25% in the equity fund. We do have a rebalance in the policy. We don't want to be too reactionary, you know, to come back to that exact percentage every time the market moves. So there is a rebalance in there that says if we're outside that target range by more than 10% for 2 consecutive quarters, then we will start to rebalance, going halfway back to target every 30 days until we're within the target again. So that's the basics of the policy as it sits now.
Does anybody have any specific questions regarding this? I know we don't have a motion on the floor, but let's see while we have Chris and everyone else out there. Any questions about this policy that would help us develop a motion? Yes, Mike.
I just wanted to note something, that it does reference VEHI's president. And this is a matter that I think that
Where does this?
the policy
president,
itself.
yes, on number 5. Yeah.
Yeah. And I think down at the bottom, it's
Yep.
so we do not have a president, and have not
That's
in
true.
the 2 years I've been on.
Yeah.
So I think it's something that we have to put on our long-term agenda to figure out.
So in practice, what we have done is it's VSBIT's president. The investment performance report that we bring to you is from John and myself. So maybe what we need to do today, if that's acceptable to the board, I would maybe propose that as a change to change the policy to be monitored by VSBIT's president in conjunction with the manager of finance. But maybe that's not what everyone wants. But in practice, I think that makes sense for it to stay within the organization. I mean,
Cheryl.
Yeah, I was gonna ask the question, you had alluded, I think that the policy, is it the same policy as the VISBIT investment policy, or basically the
No.
same? Oh, it's not, okay.
It is not. There are see what happened, just to give you a little background, is that VISBIT had, if you go back, 8-9 years, they were basically almost identical, except VISBIT has some reserve funds versus operating funds, so there's a little bit more nuance there, but they were pretty close. And then a few years ago, the VISBIT board went and had an investment review done. They hired an investment advisor and had a review done. And at that point, VEHI did not want to spend the money and did not have it done. So the VISBIT board policy changed some more at that point. The intent and the overall meat of it are similar, but the mix is different. It's got the same rebalancing triggers in it, but the mix is different. And like I said, the VISBIT has different operating funds for different programs, things like that. So it's a little more extensive. So it's similar, but they're not exactly the same. And this also is a policy that does need to be approved by DFR also. So if we do make any changes, it is pending DFR approval as well.
So if we were to continue as is and approve this policy as is without any input from financial advisors, is that we have a VEHI, we do not have a VEHI president.
Right.
That's,
yeah, when this policy was written, the VEHI president was the VISBIT president.
okay.
So that's why it's written the way it is. And that made a lot of sense at the time, because that's what happened to be. It was Laura Soares, and she served both roles. So it's a good catch, Mike. I hadn't keyed in on that. So
Well,
we
so-
can, go ahead.
Oh, I'm sorry.
Mike.
I didn't raise my
No,
hand.
I want you to go.
So I think our options are two things. One, we approve it as is, and we know that we don't have a VEHI president, or we amend it today, and then we have to submit it to DFR, right?
Mhm.
So a little background, it used to be that the VISBIT president was also the VEHI president, but then there was guidance that said Jonathan can't do both. Right? Is that correct?
Yeah, it wasn't me. It was me. It was Laura.
For you. So is
it was
do we-
recommended to VISBIT that wasn't a good practice.
does the management team think that DFR would have a problem if we modified this policy to say to reflect today's practice?
I don't think so.
Yeah, I think they'd be fine with it. They understand how it operates in
Okay.
practice now anyway.
All right. So what I would like is I'm a stickler for policy updates. So what my proposal is, we table this, you move on to the next thing. I'm going to take this document, I'm going to modify it, send it out to everybody, or I'll post it up here so that the board can review the exact wording, and we'll see if we can see if we can get approved today.
Well, I mean, so just be really clear, Mike, you're saying that you would
Oh, I'm sorry.
spend the next,
Spend the next 3-5 minutes,
Okay.
update the policy to reflect that it would be VISBIT's president instead of VEHI's president.
since I'm just going by the order on my screen, Cheryl and then
Lisa.
Lisa. I know it's Lisa, but it says Elizabeth and it
I
throws
know,
me.
that's
So
my name.
Cheryl.
That was some weirdness.
If it wasn't VISBIT president, who would it be? I mean, what are the other options? Just
You mean
asking
in
what.
general?
Yeah.
What did you say? I didn't catch it.
Well, logically, I agree with you, Cheryl. I think it belongs in VISBIT's president's hands. you know, Suzanne acts as the VEHI president on certain matters. But honestly, based on what you contract Visbit to do, you know, you really do contract with Visbit to oversee this aspect of your finances. So to me, it wouldn't really make a lot of sense to leave that with Suzanne. It makes a lot more sense for that to be with Visbit president.
If I can add to that, I mean, it's the same thing with Visbit. Chris and I confer, we look at the numbers, we look at the dollars, we talk about them. That's what VEHI is, in a sense, paying Visbit for. They're paying for Chris and her expertise with the finances, and they're paying for me. We're the ones who are looking at it. We're the ones who are going to report back to the board.
Lisa.
I just wonder, and this is just devil's advocate to some degree, are there any unforeseen implications of just giving this to Visbit in terms of, you know?
Well, you don't have it before you and you haven't looked at it for a while, but there is a delegation of authority document which needs to be relooked at. And that's where it really outlines what you're giving to Visbit to do on your behalf. Okay. It doesn't negate the controls around the Vanguard or your funds in any way. Like, in order for us to move funds in or out of Vanguard, it requires 2 signatures, and it's John and it's Suzanne. It's board chair, VEHI's board chair. So there's really no, this is more about just, we're the ones who are saying that we're going to make sure we certify that you're compliance with your policy. Which is part of the audit process as well. It's like when Johnson Lambert comes in, they're going to make sure that we're in compliance with this policy. They look at that. You know, that sort of falls under the audit piece, which falls under Visbit's umbrella.
Thank you. That makes sense.
So we still have Mike's motion to table and give him a few minutes, which he might actually even be doing right now, and then revisit this in a few minutes.
We don't need I withdraw my proposal and I'm ready to present this.
Aren't you good? Go for it.
Quick with the mouse. Yeah. All right. You see my screen?
Mm-hmm.
All right. So here's the proposal. Additions in italics, deletions in proposed deletions and strike through. And so all I've done is replace this line.
Mm-hmm.
And the bottom, the responsibility.
Mm-hmm.
Oh, actually, this 2 places.
Right.
So three swaps. So I make a motion to approve this as the new investment policy for VEHI.
Second. Oh, great. So do we have any discussion? I can't see everybody, so if somebody does, just jump in. Oh, here we go.
Just a question,
Mark?
Suzanne, quickly. Does the date need to be changed as well at the end, revised on?
I have a draft, and then once we adopt it, I'll update it, and then Bobby Joe or someone's going to send it to DFR.
Right.
Is that correct? Okay.
Is there any other discussion or questions? Okay, so all of those in favor of the amendments to the VEHI investment policy, please say aye.
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 Is there anybody opposed? All right, we have amended that from our perspective, and we need, or revised it, and we need to send it off to DFR. So what I would like to, go ahead.
All right, I just want to ask a question of Chris. Is this something that once Mike sends it over, we put on the web, or does it have to go through DFR first?
Technically, we should have DFR approve it before it gets posted.
Okay, thank you.
So our next piece that we had listed on the agenda is the VEHI mission. Do you want to I'm going to ask the body what they want to do with this at this time. Do you want to spend some time on it right now, or do you want to talk about it at the retreat, or both? Okay. Yes, Mike.
I propose that we table that until the retreat.
Okay, it's not a very lengthy document, and it certainly is very clear and makes sense to me, but I don't know if that reflects what we really want to do, so that could take a lot of time as well. So Mike, do we need to go through is that as a motion to table? My Robert's rules is vague. Yes, Jonathan.
I was just gonna say, I'm not a board member, but I thought that'd be a really nice way to start the retreat, is to start with the mission. And so
right.
I would recommend doing that. And I don't know if you have to table it or not, because I don't remember my Robert's rules from my moderator.
No, I'm not sure. Who's the guru here?
It is.
Where's
If
Joel
I
when we need
recall,
him?
I had a cheat sheet somewhere. I think it's 50% to table with no discussion.
All right, all those in favor of tabling this item to the retreat signify by saying aye.
Aye.
Okay, we don't even need to do the no's. It's by acclamation. So then we have the education report is next.
Okay, so by way of background, when Tracy Rend was chair or vice chair of this body, over a few years' time, she would occasionally raise the question of what is VEHI doing in regard to educating administrators, principals, superintendents, curriculum directors about their retirement healthcare benefits. And what generated the question was the fact that Vermont NEA, for a little more than 2 decades now, has been organizing and sponsoring workshops for union employees and their spouses on retiree healthcare benefits through VISTers. So this is a benefit specific to licensed teachers. And that led Tracy to wonder if Vermont NEA is doing this for teachers and their spouses, should VEHI consider doing it for our retired subscribers, principals, superintendents, curriculum directors, etc. And so the VEHI management team sort of took that question, and in the course of thinking about it, produced the report you have, which includes a history of VEHI's education efforts from the time we were established, when none of us on the management team were around doing this work, to the present day. I won't address the historical portion of this report unless you have questions. You'll find, though, some recommendations in the report for the retirement system and for active members. And what we recommend for purposes of licensed administrators, principals and superintendents and curriculum directors, is that we concluded that it is not VEHI's responsibility to be providing workshops to the members of these organizations. Vermont NEA took on the responsibility for teachers, and that has a benefit to VEHI because 45 minutes of each of those workshops is dedicated to VEHI and now Vermont Blue Advantage health insurance plans. But again, it's been a Vermont NEA project for its members. And if the Principals Association, the Superintendents Association, the curriculum directors, and anyone else for that matter, want to do retirement workshops for their membership and their spouses, that's obviously fine with us. And it would be their responsibility to organize them and sponsor them. And Bobby, Joe, and I, and any future VEHI trust administrators would certainly be willing to present at them and to support those associations in whatever way they needed to be effective. And as I've reported in the past, and it's mentioned in the report, I did meet with Mike McRae of the Vermont Principals Association at his request. I shared with him the materials that Vermont NEA's developed for its retirement workshops. I said to Mike he was more than welcome to use any of that material, and I'd be happy to meet with them to help them build their own program and advise them on it, since I've been doing this for 2 decades, if that would be helpful. And that offer would extend as well to the Superintendent's Association and to the curriculum directors or anyone else in our universe. So that's what we concluded as a management team with respect to that issue. And we would, of course, also continue to use our website and all of our materials. That we continue to generate all that educational material for retirees or future retirees that are now on our website. But we would not take on the responsibility of offering workshops for these school employees. With respect to active employees looking to the future, we're going to continue to do what we've always done. If a school district or a local union wants a presentation from a VEHI trust administrator, we'll be there. That can be in person or it can be via Zoom. And we would continue, as I said a moment ago, to disseminate materials the way we have historically via campaign monitors and also using our website, which has, as you probably well know, quite a bit of information. And we will also continue to provide direct assistance to individuals or couples or families that need it in this regard. So a lot of my work involves this one-on-one with subscribers. A lot of Bobby Joe's work also goes into doing this as well. And also Bobby Joe is working on a regular basis with central office staff. And similarly, I work with union leadership on all of these issues. So all of that historical work would continue. We see no reason to change it. What is new in the report is that we were contemplating beginning this year, potentially, that at the request of school districts or local unions, we would be willing to present virtual workshops on our benefit plans, the medical and RX benefits, the cost sharing arrangements, HSAs, HRAs, FSAs, TPAs, the whole kit and caboodle, that we would offer to school districts or local unions the opportunity to do a virtual workshop on these issues or some number of those issues. But we would ask school districts and local unions to let us know if indeed this would be of value to them. We thought of doing it in the fall because that's when open enrollment occurs in school districts. And for new employees and for veterans, probably an ideal time to get a little bit more education about the VEHI benefit plans if you're contemplating changing plans, or if you're thinking, well, what should I know if I decide to change plans? So that's, I think, sort of the most important stuff in the report beyond the historical information. And there's also a good deal in the report about what it is we're doing today and what you can find on the website in regard to important issues that affect our subscribers and our member groups. Any comments or questions? And assuming school districts or local unions really want us to do virtual workshops. Any thoughts on that, Suzanne?
I found it interesting. I don't know if it was Bobby Joe's comment or I made it up in my own mind about traveling long distances for 2 people in person. And I think we've gotten to the point where going to virtual workshops is pretty reasonable and doable for a lot of people on the other end as well.
In fact, we're doing all of our retirement workshops from NEA virtually now. People really, it really works. And I thought, I'm old school. I like being in front of people when I present, but I am clearly old school. And that's not where the universe is moving today.
Well, it gets past that number of people that want to sign on, and you guys always had to cut it off and say, well, this venue only allows us to have 40 people and there's 60 people that want to come. So I think your recommendations are spot on. Great.
Yeah, and I was the person that had the 6-hour drive for 2 people.
Oh, you did.
that definitely. I got 2 really great chocolate chip cookies out of it, but that was the only part of the trip that I think was memorable. The rest of it was not my
Oh,
favorite.
we've all been to those meetings though in our lives where the travel was longer than the meeting.
Yeah, so we're going to be a little more judicious in what we say yes to in that regard, but
Cheryl,
So,
I'm sorry.
go ahead, Bobby Joe.
Sorry about that. I was gonna ask Cheryl from her perspective, as a business manager, as far as like training employees, do you feel like this meets the needs of your district, that if you needed someone to come and do education, that it would be like that virtual would be okay? I mean, does that make sense?
Yeah, yes, I think so. What we do now during open enrollment is we work with CS1, actually, they're our TPA. And what we do actually is we just provide a time where staff can drop in virtually. And they drop in virtually. They can ask questions that are of a general nature, and CS1 helps us with some of those. And then if we find in the course of that it's really more of a question that is very specific to that person, then we tell them, we'll take that offline and we'll get back to you and deal with that more specific question that you have. I think this past open enrollment, we may have had 1, maybe 2 people drop in. I think that's obviously because the plans have been out there for a while, and there haven't been changes, so people are pretty familiar with them. And it does tend to be sometimes newer staff that are dropping in. So that's just a matter of time of getting them caught up and in their understanding.
Carol, if we were to do a virtual workshop or offer to do one, September, October, any recommendations on when you think it would be most effective?
We try to schedule ours, actually, I think it's like early November. So I think October would be good. I think September is too early, that people really aren't thinking about that stuff at that point. It's really later in October. It's like they don't really start thinking about it until we say, okay, the deadline's approaching. If you're going to make a change, you have to make a decision. You have to let us know. I think people aren't really thinking much about it then. So I think the closer to kind of those open enrollment deadlines, the better. I think a lot of times too, we run into issues with people that have spouses that have programs, have benefits available to them. And a lot of companies on a calendar year, open enrollment maybe doesn't start opening until late November, early December, and we're a little ahead of that. And so sometimes we find actually we get more questions once they start looking at their benefit options compared to what a spouse might have.
Yeah, that makes sense. Thank you.
Go ahead, something? Your hands up?
Did you say Bobby Joe?
Yes.
Oh, sorry, I didn't quite catch it. So just 2 thoughts on that. So one is, should things change with either us making benefit changes or the commission doing something different? I mean, we might have to adapt that if there's some type of drastic change in the future. And then I just wanted to kind of loop back to Mark's original point about the retiree workshop when we were talking about it is, like he said, the Vermont NEA puts this workshop on for their members, and it's a broad spectrum of things, including their pensions and things like that, which is why we didn't feel it was appropriate for VEHI to put on that level of workshop to talk about things like pensions and things like that, because we don't have that level of information, but we would be more than willing to present if the VSA or VPA wanted to put something on, we'd be willing to be there, but just not be the host.
So I would entertain a motion if somebody would like to make it to accept the education report recommendations.
So moved.
A second?
I'll second.
Thank
I'll
you.
second it.
Is there any further discussion? Okay, hearing none, the motion is to accept from the February 12th, 2024 recommendations on education workshops. Is that true? Is that correct? Yes, that's what it's called. All those in favor? Aye. Aye.
Aye.
Opposed? Okay. Thank you, everyone. We've been talking a lot. You've heard us talk about this in-person retreat like it's a done deal. It's something that Mike and I thought was an amazing idea that we came up with, only to find out that this idea has been kicked around over the years by management team and others. But we find in our discussions, we found that this board changes a lot. We'd like to change that. We'd like to see that we have some continuity of board members and that we have more clarity about what we do and we have more collaboration. In order to do that, we think having an in-person one-day retreat, not in any place special, maybe the Visbit offices with lunch, would be something that would be of great value to us and where we could dive into a couple of things, including our mission statement. You know, is that something we want to do? Jonathan had suggested perhaps we maybe get the wellness team talking to us, but topics in which a 1, 2, or 3 hour meeting on Zoom really aren't the most productive. And we also want to try to create a productive working environment for all of us. Is there anything else you want to add, Mike?
No, I think you got it.
So I don't know if we perhaps we need to have a motion to create this retreat, Mike. What does your Robert's rule say?
Personally, I don't think we need to do a motion.
Okay.
I think more just I'm curious I have a job that I might be able to get out of during the weekday. So I'm curious, I know Andy's probably a little busy and Cheryl. Do we think that are people willing to give up a Saturday, or guys want to try and do it during the week? I see Cheryl. Cheryl, I want to play poker with you because you don't have a good poker face.
Hey, I totally agree with you, Mike, that most of
I
us
know,
have
never have.
more availability. But as a more recent retiree, I know when people wanted to meet on Saturdays or Sundays, I went, that's the only time I have to myself. So I don't know if Cheryl and Andy feel the same way or not.
Yeah, I will say Saturday tends to get reserved for baseball. I got 2 kids that play baseball, so I can make a weekday work.
Cheryl?
Yeah, I mean, I would say the same, but I'm respectful of those of you that aren't working in education, and that's more of a challenge. So, I don't know. I'd be willing to, depending, I guess it also depends on the time of year. We could talk about that, and maybe if this is something annually, maybe some years it's a Saturday, some years it's not, or something. I don't know if we get that far, but I mean, I'd be willing to.
Well, I think the notion that we had when we, Mike and I and others started talking about it, certainly Mike and I, is that we'd love to do it sooner than later, which gets into the sacred cow of the summer.
Yeah,
And scheduling.
I think it's important as we're working together is the other part of it is a foundation of trust that we all are working towards the same end goals and that we have a relationship with each other. So the sooner the better. So we were talking about in June. I don't know if that's a little too soon, but we know that when we get into July, people are starting to have vacation plans.
Well, certainly for Cheryl and Andy and maybe others, if we do June, it would need to be a little bit later in June because I think, I don't know when school gets out.
Teachers are wrapping up around the 17th, I think, for us at this point, but that's not, for me, that's not as much of a factor. So I'm fine, and I work all year round. The business office does, so that doesn't really matter. I mean, I didn't know if there, if maybe it starts late in the afternoon and it's maybe an early dinner. So folks that have to take time off, that's what I mean. If you have to use a personal day or a vacation day to do the meeting, I feel badly about that. So maybe.
Is it just the three of us? Lance, are you retired? Yeah.
Yeah, I am retired, and June during the week is fine with me. If and I'll just say that if I was teaching, I would try to get my administrator to give me a professional day for a meeting like
Yeah.
this if I was still teaching.
Yeah.
No, I appreciate the offer of starting at noon, Cheryl, but I think I'm good to take a full day, and I'd rather start fresh in the morning.
Okay.
All right, so why don't we do this? Why don't we do the doodle poll, and we'll send out some dates to everybody on here, and we'll see what we can find.
Lisa, did you have something you wanted to say? You'd had your hand up at one point.
I just, the July and August thing starts to become sacred when you have grandkids that you're taking care of.
Well, yeah, that gets to be really hard. Andy, are okay with this?
Yeah, no, I think I know personally the last week of June is just out. But other than that, I can cobble something together. I'm not worried about it. They tell me I get a bunch of vacation, and then they don't let me take it. So
yeah, that's not true anyway. So Jonathan, you had extended the invitation of the VISBIT office. Is that something that's reasonable for people? It's in Montpelier. I know it's wherever we pick, it's going to be a ways to go, but it would be certainly easier for our management team, I think, to make it there.
Yeah, VISBIT office is happy to have you there. We can meet wherever you like.
Well, there's a nice little conference space downstairs.
Yeah, I'm fine with that travel. That works for me.
Okay.
I don't know where everybody else comes from.
Yeah, it's fine for me.
doesn't matter.
So Bobby, Joe, do you have what you need to maybe send out a doodle poll for us?
Are you thinking, it sounded like Andrew said no to the last week of June. So thinking the second and third week, we should try to find a date. Does that make sense?
I think that makes sense. And if this runs into problems with school graduations or other administrative duties that somebody has, they'll just say no. Well, that's good.
And I'd say let's put the doodle poll into July. I know, Lisa, you're going to have conflicts, but let's do it all at once and see what works.
Yeah, I just can't do mid-July on.
Are we good with this topic? Do we need to? Okay. In terms of the future agenda items. So if we got together a retreat in June, do we still need to have a board meeting in June as well?
Yeah, I had actually, sorry, I had put that in the chat that we could maybe handle the Blue Cross and the NEA.
Oh, okay.
On contract at the same time instead of having a separate meeting.
Yes.
Yeah, so let's see if we can doodle up a June retreat. Okay.
What I have on that is contracts, and the annual work plan is something Mike, you and I were going to subcommittee. We still have obviously some policies and procedures, discussions to have. We might be able to throw in. We did, if I'm looking at the list of things we have over on the you know, the carryover for future topics. We might be able to do the wellness team piece during our retreat as well.
I would just need to give them a heads up,
Right.
to plan. and
It's a
get the-
possibility.
Yeah.
Okay.
Yep.
The other
If
thing I
we-
wanted to mention was that the budget approval. I'm not sure. We haven't always had the budget approved. I don't know if that's really a retreat item though. We don't really always get that approved before July 1st. But I just want to make sure that's on a future agenda somewhere.
Well, if we don't take it up, the next time we might have another board meeting would probably September, sometime prior to the October annual meeting you have at Lake Maury.
We have to approve the rates, the health and
Ah.
dental rate in October. So
Okay.
it might be September, it might be October before we can meet again, or that we have to meet again.
So it's up to the board, whether, I mean, we don't have, the only thing with the budget at this point is we don't have the final number from Visbit or the Vermont NEA yet. I think we would have the Visbit number by your retreat. I don't know about the Vermont NEA number. So that's the only concern with setting the budget.
Well, we could always, as a placeholder, put in the current Vermont NEA contract budget with the proviso, if we agree to it later on, that it would be adjusted when and if contract talks ever finalize. Jonathan?
Joe, I don't recall, do we need to, as we do for Visbit, set a date and time? Did we talk about that?
For the annual meeting, that you're talking about, I have it on my list.
But we have to do that at a board meeting, right?
We do, which is
So we
what we're,
can't do that in October,
no, we have to do it in June.
June. Okay.
Yeah,
So we have to have a meeting in June. Should we, is it worth doing verbally right now, setting a time for like a 30 to 60 minute June 30th meeting, just in case as a backup? We do that expeditiously.
As a backup, rather, if we don't have the retreat, is that what you're saying?
Correct.
Would not necessarily be a full-on 2 to 3 hour meeting. This would be to take care of the business we have to do.
People,
But it's starting to look longer and longer.
yeah, I'm just gonna throw this out. June 28th, that's a Friday.
Fine with me, but
Ooh.
So I know I'm out of town, but I can zoom in for June 28th.
That's the
It
week
would
you're
be
out. You're out that
time.
whole week.
We talking about an
Yeah.
abbreviated meeting?
Yeah,
Yeah.
just talking about a 60-minute meeting.
It's like
I mean, and Mike, I'm happy to zoom in. I just can't be there in person because we're gonna be down on the Cape, so.
Well, this would be a meeting that we would have just because we need to get something done. So it would be
Yeah.
a Zoom
Be
meeting no matter
virtual.
what.
All right, how about 9 a.m.?
And I'm going to have to only tell you, I do have a commitment, I think, that day, and I just don't remember what time. And you know what a kitten on the keys I am with virtual and
All right. Let's
I
just,
like-
why don't you check on that? Does anybody else have a potential conflict? Kitten on the keys.
That's a great expression. I haven't heard that before.
They actually.
no, I
actually
really
fix the
am in a
keys for
different
that.
century with technology.
All right.
Thank God
so-
I retired when I did. But I do have a cell phone, Mark.
Well, and Mike
So,
just verbed doodle, like doodling it up. He said, we're gonna doodle
Right.
up. That was a good one too. I like that one.
unless there is any other business we need to accomplish, is somebody ready to make a motion for adjournment?
I make a motion that we adjourn.
Second.
All right, all those in favor? Aye.
Aye.
All right.
Okay, thank you very much.
Thank
Thanks,
you.
everybody.
Thanks,
Thank you.
everyone.
Bye.
See you.
Thank you all.
Bye-bye.